Profit and that buyback story very much in focus this morning. Speaking of buybacks and profits, UniCredit also in focus, boosting their shareholder payout to about 9 billion euros. They're also in the midst of that takeover battle with Banco BPM, trying to get their hands on some stake of Generali as well. We're going to dive into those details shortly. Kering is the stark underperformer here. They're warning about profit losses for the full year. We'll see how that reflects on the indices, Anna.
Yeah, so a full complement of sectors to keep an eye on then, Critty, when it comes to the start of trade. We've got news from the banking sector, the energy sector and the luxury space. So that keeps us focused certainly on London and on Paris, and we will see how the Italian market performs as well. So this is the picture so far. The FTSE 100 is the one that's out of the gates. It's pretty flat, actually, a slight upward bias there. The IBEX down by 0.1%. Stock 600 then overall a little bit weaker, but we don't have an opening price on the CAC 40 just now, and we don't have an opening price, it would seem, on the Xetra DAX either. So we're waiting for those to open up, waiting for the Italian banking sector to get underway as well. What do investors make of the latest moves from UniCredit, or the numbers through from UniCredit in the context of all of that acquisitive action we've seen them pursuing? The DAX then opening slightly negative, the CAC slightly positive. Not a great deal of direction, it would seem, in this morning's session, Chrissy.
Not a great deal of direction, but certainly some really interesting movers, especially when it comes to the commodity space here. Your biggest index contribution, I'm going to start with the FTSE here, given that we're seeing more volume there. Actually seeing upside in the likes of Shell, likes of BP, and some of the other commodity-exposed names. But broadly, as you said, Anna, it is actually a fairly down day. Banks and maybe even media are the only kind of sole outperformers. The rest are marginal gains to the downside. When we look at the weights here, a lot of it coming actually in the mining sector, and I wonder if that is the kind of read-through from the tariff story that perhaps we were waiting for in the last 24 hours as well. The likes of Glencore, Rio Tinto, Anglo American, those are your biggest weights on the FTSE 100. Broaden that out to the Stock 600, though, and it's a little bit of a different story where you are seeing the Stock 600 see more of the kind of downside moves in some of the heavyweights like Novo Nordisk and LVMH.
We see the food and beverage sector is one of those that is going higher today. It seems that there's an asset sale at DSM that's being sold to Novonesis, that particular asset, and so as a result, that particular stock goes higher. But it's one of those days where just a little bit of news flow like that can push that share price higher, which then pushes the sector, and that's one of the four sectors that's doing well this morning. Yeah. To your point, then, energy is also one of those sectors that's doing okay, so that's up by 0.3%. Of course, we covered the BP story quite extensively yesterday and again today. On the downside, we do have Basic Resources in retreat. Stora Enso is a paper maker over in Finland, and that stock is down by 4%, so it's not necessarily the usual names in the basic resource space that we talk about when we think about that negativity. But Stora Enso facing pressure, its EBIT outlook coming in a little lackluster, according to Jefferies at least.
Of the three stocks we were keeping an eye on in the lead-up to the open, Kering, BP, and UniCredit, I think we all expected Kering to drop and UniCredit to rise. We're seeing the exact opposite dynamic this morning. UniCredit shares down about 2.4%. Kering, despite their kind of drop in revenue being more than expected, actually higher by 4%. That is on light volume, though, so let's see how that all shakes out and bring in perhaps a true expert who can maybe sew some of these threads together for us. Lewis Dudley, Global Equities Portfolio Manager at Federated Hermes, joins us around the table. Luis, pleasure to have you on the program. I'm a little confused here because we keep talking about this kind of earnings outperformance in Europe that's been driving kind of the share price, or at least the outperformance relative to the rest of the world in the last 5 weeks or so. Is this a blip? Is this a momentary moment in the sun?
I think, we're seeing so much volatility at the moment, so much changing on a day-to-day with, the tariff news and people absorbing that actually there's a lot to change, and obviously people looking for those earnings expectations coming in, and often, for certain sectors we're seeing some really quite lofty expectations still. that are moderating, and that's when the market gets disappointed. And certainly maybe on Kering, it's a case of the opposite story where expectations were very weak, and then now it's coming in above that.
I mean, it's fascinating that there's almost this kind of rewarding for you're not as bad as we thought you were, which is almost counterintuitive to the growth story you need. It feels like a lot of the buyback story and payouts are also driving the price action. At the same time that we're talking about deals and takeover activity, how do those two work together when we're still talking about underperformance in Europe?
Yeah, I mean, both those things are also very kind of questionable, right? So when they announce the buyback, obviously it can be a positive surprise, but until they actually go through with it, we don't kind of know actually how good that might be. And sometimes, companies are a bit more hesitant about announcing in a more kind of exuberant or enthusiastic way around buybacks because they actually don't know at the moment. There's a lot of uncertainty, in particular with inflation moderating, but maybe not as much, and they may see this resurgence. So a lot of uncertainty for management teams at the moment, I'd say.
Louise, good morning. Can I ask you about the tariff story and how you're navigating that at the moment? What's the sort of mindset you're in when you look at all the news around tariffs and how you respond to it?
Yeah, so I think at the moment we definitely see China being very well prepared for tariffs, and actually Europe could be a potential weak spot because if China can't sell into the US as much as expected, then where does those excess supply go? And therefore, if that comes into Europe and then they get kind of those weaker prices. So actually, it's a bit of a challenge for perhaps European domestic names where they're seeing even more competition coming in from China where they hadn't previously.
So this is going to weigh on pricing power for European corporates, you think?
Yes, I think so. And I think what we've seen at the moment is that in terms of earnings expectations, that sales continues to remain quite buoyant, but actually it's the profitability that hasn't come in as strong as people were expecting.
So does that mean that we get quite divergent monetary policy then between Europe and the Fed? Because if the ECB is going to have that as the sort of slight deflationary backdrop, that impulse coming through from China, will that justify a sort of an interest rate differential then between the US and the Eurozone? Because there have been periods where we've wondered whether that was such a good idea or not to have that differential.
Yeah, no, I think we're already seeing that, and I think expectations at the moment have been widening and widening, and now we're looking into how much could we see actually rate rises within the US, which is something on the ECB side we're certainly not even considering. So definitely in the US, while we've got low unemployment, we've got wage growth, the chances of inflation resurging, and then therefore the need for those interest rate elevation to come in is something that's definitely a bit more likely.
Louise, we are seeing defensive parts of these markets. We are seeing, despite perhaps complacency on the day of announcements, and we are seeing this kind of general appetite for the Mag 7 despite these sky-high valuations. We're seeing appetite for the likes of gold, even a little bit of a bid into the bond markets in Germany and in the United States as a function. There does seem to be a caution baked into this market. What's the hedge?
Yeah, I think, people are looking for that quality bias. I think, it's something actually we're also looking for within China. So where is the quality growth within China because of the deep kind of valuations that we can get there? So that's something that's quite important. And at the same time, with the big benchmark positions in the US, the Mag 7, those are names that are quite hard not to own. And we know that they are still delivering good growth numbers, going into this year, next year. We do expect a little bit of a slowdown maybe versus expectations from the end of last year, but still well ahead of the rest of the market, I'd say. And tech is definitely still a sector we're looking at.
It's interesting you mentioned the China component of this because, Anna, we talk about this on our show all the time, the read-through into the mining sector, the read-through into the luxury sector. I almost wonder what the trade is in terms of what matters more for Europe, what's going on in the States, what's going on in China.
Yeah, absolutely. The push and pull between those things we see in the luxury space, don't we? Pushed and pulled between those two different consumer markets. I wanted to ask you, actually, picking up on what you were saying there, Louise, about appetite for European stocks, and Europe's done okay. I was reading, you were talking about the Mag 7 and still liking the technology names. I was looking at some research by Barclays talking about going actually short US exceptionalism in the short term as a sort of temporary tactical trade, and they they say they've been right to be long Europe over the last 6 weeks or so. So if you stay in tech, are you in danger of missing out on some of the positives that have been happening in Europe in terms of that stock outperformance?
I think within Europe, it's important to be very selective because there's still a lot of sectors that are not, doing so well because of their exposure to China, and we haven't seen that rebound in China yet. In particular, autos, I think, is a sector that, Europe very overexposed to, and that whole sector continues to be weak. And obviously the tariff, all of that, comes in very poorly for them as well.
Yeah, are you expecting, there's all kinds of themes that people were looking ahead to 2025 to see more of, and banking M&A could be one of those. Is that something that you see as delivering some strength for European banks and the European banking sector?
Yeah, I think so. But I think actually M&A more broadly as well. I think we're starting to see more deals, everyone talking about different kind of ins and outs that could happen across the space. And I think because of AI and the ability to really think about different business areas, different growth areas, but not specifically within banking, I wouldn't say.
Yeah, interesting that, Chrissy, we were talking about in the credit space earlier on about how maybe leveraged buyouts haven't necessarily picked, or the M&A story certainly hasn't picked up in the way that maybe people thought. And this goes to the tariff story as well, doesn't it? Because if you've got that, you might have expectations of higher growth in the United States, but if you've also got uncertainty around what tariffs are going to look like, that can have a chilling effect, and we'll see whether that is maintained.
Yeah, and I think so many people have said, who are still kind of bulls on the states, have been saying that maybe the tariff piece is offset by the fact that Donald Trump has a very deregulatory agenda, one that does spill over into Europe. Are you seeing evidence of that, Louise, that kind of maybe loosening of policy in the states has a ripple effect across the world?
Yes, I think so. I think, we're seeing that through Germany. I think the politicians, how they're talking about, when they're setting out their agenda, that deregulatory tone, I think, has captivated a lot of attention across the public, and businesses do also obviously like it, and they jump on it. And certainly we're seeing the US banks very much beneficiaries of that deregulatory trade and making the most of it also from an M&A perspective as well.
Louise, thank you very much. Thank you for joining us. Louise Dudley, Global Equities Portfolio Manager at Federated Hermes. Guy's gone, but that's no reason we can't still look at his core six. Let's do that. Let's have a look at how these European these large European corporates are performing today. There's a little bit more red on the screen than there is green, but not by a huge amount. I guess the largest mover there is Ferrari, up by 1.1%. The stock 600 actually across Europe is actually almost entirely flat right now. So individual movers might be making their mark, but overall we are flat across these European markets. Let's check in on some individual stocks, though. Joe Easton has some other stories for us. Joe.
Take a look at what's going on with Entain here in London. This stock really hit hard. It is the worst performing stock in Europe today, and does look like it's just gone into a trading halt, potentially not getting a price ticking on that anymore. But the CEO standing down, Gavin Isaacs, leaving after 6 months only in the role. I haven't seen a clear reason for that, but the previous interim CEO is coming in and taking his place for the moment. There we can see it ticking further now, resuming trading, down more than 10% on that stock. This is the owner of Ladbrokes, and also they've got the big partnership with MGM over in the US and the US sports betting. So a real shock for that stock today as the CEO stands down after less than 6 months in the role. Then we can see in terms of the luxury shares, we are actually seeing a rebound in Kering. Not too bad given the sales were down 24% on a quarterly basis, but all of that negativity priced in. So we're up close to 5% on that. Not much movement in the peers in terms of Kering, but it is really a rebound story for that company today. Then in terms of UniCredit, of course, all the focus on the M&A news flow that Critty was running through earlier, but we are seeing them boosting some of their returns, but that doesn't seem to be lifting the stock. We'll have to dig down into why exactly there's disappointment on that one. I did note that the net interest income was down sharply on the quarterly basis. Potentially that is the reason there, but the buybacks did look pretty strong from UniCredit. We'll dig further into that one, as I say. Then in terms of the UK stocks, one of them was one of the worst performers as well across Europe. This is Bellway in the home building space, one of the mid-cap home builders, actually giving a very downbeat guidance in terms of the recovery or the potential recovery in the UK housing market. They're not quite seeing as much of that as they would like to, according to the statement, and we're seeing their house broker Citi was flagging some real cautious statements from that company today. So Bellway dropping in London, and then finally another one declining in London and in Germany as well. This is in the travel space. TUI giving disappointing updates on their bookings numbers. Bookings from both German and British customers not looking good. The UK bookings in negative territory, according to their statements. That's hitting that company today on both the German and UK exchanges. TUI in the travel space, one of the worst performers on the Stock 600 this morning.
Joe, thank you. Joe Easton from our equities team. Let's get Chrissy to some breaking news coming through from the EU Trade Commissioner, Maroš Šefčovič then. This morning when I saw the news that we'd had the 25% tariffs imposed on aluminium and steel, I then thought to myself, well, when does Europe's retaliation come? Because we've actually had the news of how these are going to be imposed. So now we get the Trade Commissioner speaking in Parliament saying that he deeply regrets the US decision on tariffs. The US will be raising costs for its own businesses, so pointing out some downside there to the US itself. Then Šefčovič going on to say that the EU will always protect its interests and will impose countermeasures against US tariffs. And I suppose that comes as no surprise because Europe had already said that it would, and it fits with the 2018 playbook where we saw steel and aluminium tariffs go on, and then we saw the imposition of tariffs on the likes of Harley Davidson, Levi Jeans, and all of those iconic US names.
Yeah, it's a really interesting one as well because this is also coming right on the heels of those steel tariffs as well. And this was something under the Biden administration that had kind of been put on ice in the form of quotas, that if there weren't more tariffs imposed, maybe the quotas would be, and Europe hadn't fulfilled those quotas as well. So you can perhaps see that maybe they have some leverage. It's interesting as well because now I'm curious how this actually affects some of the markets, because you're not actually seeing much market reaction off of these comments, even though this is coming from kind of an official government body as well. So Eurodollar still at 103 handle, but risk sentiment certainly slightly tilted to the downside.
Right, yeah. I mean, we're flat across European stocks, aren't we? But yes, US futures certainly look a little negative. I mean, Šefčovič saying that the EU stands open for negotiations with the United States. And as we've seen with Mexico and with Canada, there has been some willingness to negotiate. We will see what Australia manages to carve out when it comes to aircrafts as well.
And it comes to the buying as well. Remember, Donald Trump is trying to get Europe to buy more LNG, knocking at a door that I think has been swung quite widely open, even by Ursula von der Leyen herself out of the EU. We're going to continue to monitor that conversation. The market moves off the back of it. Coming up, we go back to maybe one of the key themes in Europe right now, and that is banking consolidation. UniCredit reporting a fourth quarter profit beat, allowing it to boost shareholder returns. We're going to dive into the numbers and the consolidation story next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Earnings season is here.
Kicking off earnings season, there's a lot going on.
Bloomberg is first to break the numbers.
Air France KLM.
NatWest well above estimates.
We have further earnings coursing from GSK.
With the smartest insights.
Clearly, the macro and geopolitical front is full of open issues that if they come all together at one stage, they can create some dislocation.
Is that why you were cautious about the fourth quarter?
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to the opening trade. 19 minutes into our European session, and we have a fairly flat market, actually, proving itself to be quite resilient to what we're hearing from the European side around trade this morning. We're hearing from the German Chancellor, Olaf Scholz, saying that the EU will respond together against Trump's trade tariffs. He was making those comments in a speech to Parliament. Almost the same time, we were hearing from Maros Sefcovic, who was making a speech to the European Parliament then, Chrissy, saying that the EU, as we said in the last part of the programme, the EU will impose countermeasures against US tariffs. We'll wait for some detail as to what those will look like.
Yeah, some strong comments coming from Scholz, now adding that he hopes the misguided path of tariffs can still be avoided, perhaps that 180 U-turn that we've seen on the Mexico and Canada front as well, saying that trade wars always reduce prosperity for both sides. So we, of course, will keep you apprised of this headlines as we get them. Let's get to some earnings news now as well, because Europe, of course, has one eye on the banking consolidation story as well. It comes on a good day where UniCredit shares have also been moving quite a bit, down about 3% in trading. The Italian lender sees a, quote, moderate decline in net interest income in 2025, but are still talking about increasing some of their shareholder payouts to the tune of about 9 billion euros, I'm told, all as they try to get their hands on some of the other Italian banks. Tommaso Ebhardt, Bloomberg's Milan bureau chief, joins us now. Tommaso, the Italians are keeping us busy. Let's talk about the earnings first, then we'll get to the consolidation story. The shares are down quite a bit, despite these earnings actually quite strong. Can you connect the dots for us here?
Yeah, hi, buongiorno from Milan. We have been quite busy since the start of the day. Today, obviously, UniCredit reported early in the morning, and we can call it a mixed bag. On one side, clearly results were better than estimate. On the other side, the outlook for 2025 is somehow less ambitious than what Andrea Orcel is usually used to give investors. UniCredit somehow created a narrative of beating expectation, and for 2025, as you said, they expect a moderate decline in interest income. Also, revenue for 2025 are seen somehow below what the estimates are for now. So it's sort of a mixed bag. It's going to be a difficult year as we read in their earnings statement. But on the other side, as you said, the shareholder return will be quite important. Also for 2025 is going to be more than 2024, and then they target 10 billion euros net profit for 2027. So overall, we can call it a day where investors are selling on the news. Essentially, they are selling because probably the results and the outlook is less exciting probably than what they were expecting.
Yes, and Tommaso, how does M&A complicate the picture over at UniCredit? We've heard from the management there, we've heard from Orcel setting out why he's going after some of the targets he's after. So talking about BPM as being core to the geography of, that they have already at UniCredit, and Commerzbank offering some optionality around Germany and around Poland. Talk us through some of the M&A lines.
I mean, clearly, Andrea Orcel has changed the landscape of Italian banking. He's pursuing M&A today. He reiterated in the statement that M&A will come only, if it makes sense for the bank, if it can generate the same size and the same value that organic growth will do. Europe needs stronger banks. That's the argument by Andrea Orcel. That's why he has started his campaign in Germany, but also in Italy. And his movement in Italy has generated a cascade effect after UniCredit announced a bid for rival Milan wealthy bank, Banco BPM. And then we had Monte dei Paschi di Siena surprisingly bidding for the investment banking Mediobanca. And then the other day we had Banca Popolare dell'Emilia-Romagna being for Banca Popolare di Sondrio. So after a decade, when we have discussed even on Bloomberg TV, the need for consolidation in the Italian banking industry is happening now, and Andrea Orcel is the person who has somehow started this battle for the control of the Italian banking system.
Certainly something that's keeping us on our toes when we get those Banco BPM earnings after the bell today. Bloomberg's Tommaso Abhart in Milan. We thank you so much. He was just talking about UniCredit as well. UniCredit CEO Andrea Orcel will be joining Bloomberg TV tomorrow at about 9 a.m. London time. So we're going to get his views on that consolidation story.
Let's go to another earnings story. Kering shares rising as investors have been a little encouraged by better than expected profit, it would seem. And are there signs of stabilization at Gucci? The company's biggest brand has struggled in recent years. Let's talk to Bloomberg's Angelina Rascouet, who covers the luxury space for us. Gucci's still not out of the woods then, it seems, from these numbers. Angelina, tell us how it's been doing through this last quarter.
Yes, hi, Anna. Indeed, Gucci in the fourth quarter, sales were down 24%. So indeed, that was a slight improvement from the third quarter when sales were down 25%. I mean, Gucci has been the problem child at Kering for many years now. Kering derives around 2/3 of profit from Gucci. And last week, Gucci actually said that its designer, Sabato De Sarno, which it had named about 2 years ago, was leaving. So all of a sudden, investors will have to be patient because that means for the next few quarters, the creations will be done by the studio. And so there's still a lot of uncertainty there.
When you talk about those that uncertainty, though, I mean, is there a turnaround plan? If you look at the fourth quarter numbers very quickly, walk us through the fact that those numbers came in line with estimates, and those shares are still rising. Can you just square that circle for us? 30 seconds.
Yeah, absolutely. I mean, basically, they really insisted on the fact that they're doing cost controls, but also there was low sentiment. I mean, the shares of Kering, have been falling. They fell more than 70% since their peak in 2021. Last year, they fell 40%. So I think we're going from a low base. So any indication that they have some things under control is probably enough for investors to be buying today.
Certainly something we're going to be keeping a very close eye on. Kering shares almost higher by 5% this morning. Bloomberg's Angelina Rascouet in Paris walking us through those details of the French luxury giant. Coming up, we're going to shift focus to the commodity sector. Traders preparing for a 25% tariff on U.S. imports on steel and aluminum. We're going to speak to Marcus Garvey, the head of commodity strategy over at Macquarie next. This is Bloomberg.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of the regulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is the opening trade. We're about 30 minutes into today's session, seeing some marginal moves on the index level. I'm looking at a stock 600 that is quite literally flat at the moment. The DAX seeing some marginal gains. The FTSE 100 higher by 0.1%. Now, this is all really important because on the surface, it looks like calm, but underneath, you are seeing perhaps a little bit more of the storm, more of the volatility, and a lot of that is driven by the earnings story. Let's go there. One of the top stocks we've got our eye on, BP, has pledged major changes at its upcoming strategy update after reporting a sharp drop in profit. Bloomberg's James Herron joins us now around the table. 2 key words: strategy reset. What does that mean?
It's a good question. I think people have suspect what it could mean. And why they might be doing it this time. Obviously, over the weekend, we had the news that Elliott Investment Management has taken a stake in BP and was planning to push for significant changes. We still don't know what exactly they're planning, but certainly the expectation among the analyst community has been perhaps board changes at BP and probably most likely a move back toward oil and gas, where the better returns are from clean energy. So this is a big shift because BP 5 years ago, when Bernard Looney, the former CEO, came in, was the first to really embrace net zero, to set the most ambitious targets, and it hasn't really worked out that way. It seems the profits are still in oil and gas, and that's where investors want them to be in their core business.
Right, yes. It seemed that, yes, we saw BP as the kind of flag bearer for the industry cleaning up itself, and then shareholders kind of coming to the fore and saying, actually, we can go find wind assets and renewable assets elsewhere. We want you to just keep focusing on oil and gas. Is that how we explain the BP underperformance over recent years?
I think so, yeah. There's a lot of issues to it, and part of it is that BP, going back to the Deepwater Horizon tragedy like 15 years ago, it has a weaker balance sheet than its peers, and so its returns to investors, which have been the crucial thing for the last few years, share buybacks, dividends, are always seen a bit more tenuous than for Shell or for Total.
Hey there, startup founders. Are you ready to take your business to the next level? Welcome to TradeMasters Hub by SG Trader, the ultimate platform for connecting startups with high net worth investors, venture capitalists, and angel investors. Imagine pitching your innovative idea live, right in front of top investors who are eager to find the next big thing. Whether you're seeking £50,000 or up to £50 million, TradeMasters Hub is your gateway to the funding and visibility your startup deserves. Here's how it works. Create a compelling 3-minute video pitch. Share your vision, highlight your achievements, and showcase what makes your startup unique. This is your chance to capture investor attention and make them believe in your dream as much as you do. But that's not all. TradeMasters Hub isn't just about raising funds. It's about accelerating your growth. With our platform, you'll get unmatched exposure, interactive trading sessions, and educational resources to refine your investment strategies. Picture this: your startup front and center, grabbing the attention of investors who can propel your business forward. This is your moment to shine, to turn your idea into a reality. So what are you waiting for? Apply and submit your pitch now. Scan the QR code on the screen. Don't let this opportunity slip away. Connect with investors, boost your visibility, and watch your startup thrive. TradeMasters Hub, where ventures thrive and dreams become investments. Unlock your startup's potential today. Apply now and let's get your startup the attention it deserves.
Drivers. I was reading about central banks buying, particularly people talking about the PBOC. But then I think about whether we might see some sort of resolution in Ukraine, or at least the first signs of that by the end of this week. We've seen some markets responding to that over the last couple of weeks. Marcus, is that something that we need to be aware of when fixing $3,000 in our minds on gold?
I think from a near-term perspective, if you've got anything that reduced geopolitical uncertainty, it would naturally be a slight headwind for gold. But if we look at how gold performs in relation to that sort of geopolitical risk premium over time, it's generally a relatively short-term driver of the gold price. And then actually, I think the bigger thing when we look at the broader mix of policy changes that we're getting from the Trump administration for gold is not just that in terms of things leading into Russia-Ukraine negotiations, not even the tariff dynamics that are front and center at the moment, but really what we get in terms of broader fiscal policy. And when we get into the proposals around tax, I think that's where we'll really see the implications for the fiscal balance, and that as the key driver for the gold price. Because if you think about what's been underpinning gold's strength, you mentioned central banks, that's certainly part of it. But I think over, say, the past 3 years, the resilience of private sector investors in the face of relatively high real rates has been very striking. And a key reason for that, in our view, is that the deteriorating and really very poor fiscal outlook that you have in a number of major developed markets, obviously principally the US. So the implications for that from what we get in terms of Trump administration tax policy proposals is going to be key more for the outlook over, say, the balance of the year and into 2026, rather than just the immediate short-term price action.
So, Marcus, talk to us a little bit about that immediate short-term price action, because the reports initially of these tariffs on steel and aluminum that did ultimately drive the gold price to these record levels came on Sunday night. We all woke up Monday morning, got our Bloomberg terminals out, looked at our handy-dandy pricing, and found very little market reaction, but we couldn't quite understand why. There was some analyst commentary that it would take 2 or 3 days for the markets to digest it. Why are the short-term markets not reacting in the way maybe they would have 4 or 5 years ago?
And when you say, sorry, little in terms of price action, do you mean specifically for aluminium, for instance, or do you mean on a broader basis?
Well, both. I mean, you take your pick. I was referring to steel and aluminum, but I would argue that there's an element of complacency in the broader market as well.
So I think there's 2 aspects there that I would point to. One, on a broader market basis, the extent to which we're still seeing markets, reasonably speaking, discount the macro implications of what we've had on tariff announcements. That's, I think, partly because, of course, you had the Mexico-Canada tariffs announced and then delayed in terms of implementation, and obviously may never be implemented. And also that the level of tariffs initially placed on China and the response that we've seen from China is also less than some people in the market might have feared. But I think if you focus then on steel and really aluminium specifically in terms of the tariff implications, we would say that actually for aluminium prices, the tariffs have very little impact in terms of something like the LME market price. If anything, at the margin, we'd argue it's slightly net bearish because it does increase the price that's going to be paid by US consumers in the near term, and therefore is slightly demand destructive. But really what we're seeing in terms of the key impact on price is the US price, which is not in that exchange price. It's the US physical premium that consumers pay on top of the price. And if you take that back to even, say, prior to Trump's election, the US physical premium already has roughly doubled, going from sort of in the order of $400 a ton to more like $800 a ton at the moment on where forward pricing now is. So that has moved substantially.
So, Marcus, you talk about it being slightly demand destructive, and this is, of course, in the kind of falling background of falling aluminum and steel prices as well that we've seen prior to these tariff announcements as well. But how, at what point does that affect the supply chains for, say, car makers or defense makers or manufacturers? When they're looking to price some of this, how does that show up or not show up?
President Trump said in his press briefing earlier today that ultimately this would lead to lower prices in the US because you'd see production increases in the US. I think there's the possibility of that if we move further down the road, but in the very near term, we do think this is going to be a price increase for US processors and consumers, and one which is not a full pass-through of these tariffs, because if you look at where that supply is coming from, particularly take the example of something like Canadian aluminium, on the net backs of the received price that's going to be it's going to be earned by producers in those regions, it's still going to be, I think, in most cases, the best option for them to deliver into the US and absorb some of that tariff themselves. But it will, as we've seen in terms of the market pricing, also I'd say in terms of the steel futures move that you've already had, it's clear there that you're going to have higher prices paid by US processors and consumers in the near term, and that's hard to avoid. In steel, I think there is scope for utilization rates to go up and increase supply domestically. In the case of aluminium, on a sort of 1 to 2 year view, you might talk about a couple of small smelter restarts, but really there isn't anything in the near term that's going to change the domestic supply in aluminium in favor of increased production.
Marcus, I wonder what you're watching for when it comes to retaliation, because before we started this cycle of tariffs and response, various guests were telling us, what matters is the tariff itself, but then also what retaliatory activity we see. And we've heard from Europe this morning, Maros Sefcovic saying that the EU says it will impose countermeasures against US tariffs. What are you going to be watching for from a commodities perspective? What do you think is likely to be in the crosshairs?
I think if you look at the last trade war, obviously, not so much for Europe, but on a broader basis, things like agricultural products were dragged into it. Also, things not commodities related, like bourbon, was dragged into it. So it was a whole host of things. I think from a commodities specific perspective, though, really the biggest thing is, I think, away from the focus that we're having on Canada, Mexico, also Europe, and specifically aluminium and steel, but into what happens with China. Because as that 10% tariff comes in, we see that get ramped up progressively, and therefore we get greater response from China, as we've already seen in terms of the Chinese response being very commodity targeted in terms of things like tariffs on coal and LNG imports and some agricultural commodities. Do we see that roll out to a broader suite of commodities? Do we see increased rates? And also, do we see restrictions on Chinese exports, as has been talked about on some of the minor metals in relatively recent time? And then I think the other point will be, if we get a more aggressive approach from the US towards China, which would be, in our view, more demand destructive because it would drag on global goods trade, global industrial production, and therefore commodities demand, what do we get in terms of a Chinese offset to that from something that would boost domestic demand? So that I think when we try and net all these things out at this point, it's very hard to be overly prescriptive about exactly how we think things are going to play out.
Okay, and I wonder how South Korea fits into this picture as well, because we're just hearing some news lines coming through from South Korea saying they're making all efforts to build close ties with the Trump administration. I mean, this is a country that is very much in focus when it comes to some of the tariffs we've already heard about from the Trump administration.
I think one of the things that's interesting in that context, if you read through, we don't yet have the aluminium document, or at least didn't at the time of me coming on air, but if you read through the steel document that was published today that goes through the tariff imposition, unlike after the Section 232 tariffs in 2018, where you then got a whole series of carve-outs, both for some products and also for a lot of countries, really those that were part of the US security umbrella, this at the moment is incredibly explicit and really quite maximalist in its approach of saying no exemptions. Now, to what extent that is something that is fulfilled or ultimately becomes a negotiating position is up for debate at this point. But as a starting point, it's very, very clear that this is an evident distinction from what you had back in the first Trump administration and that initial point of imposition of the 232 tariffs.
Certainly something we're going to be keeping a very, very close eye on. We'll let you go and read maybe perhaps the aluminum document as well. Marcus Garvey, head of commodity strategy, giving us that breaking analysis on some of those South Korea headlines that we were just talking about. Of course, just reiterating that South Korea is now looking to make more of an effort with Donald Trump and the Trump administration after holding that emergency meeting yesterday as well. That tariff story echoes around the world as the European Union said it will respond to any tariffs the U.S. might impose on it, escalating that transatlantic trade dispute. We're going to dive into the details next. Stick with us. This is Bloomberg.
First time, got to many times go visit with Steve Jobs to try to get an Apple box to be our box. And we were trying to merge boxes. And of course, they have Apple TV, we have our box. Never actually happened. And in one of the meetings, he said, well, you should give up because we're going to win that. But you should put Wi-Fi in all your boxes. And that's how you'll win. And you should be the best pipe. And he said the best dumb pipe. So I went home, went to our chief technology officer and said, what's Wi-Fi? And today we have the nation's biggest Wi-Fi network. And we have more customers. And 90% of your cell phone usage, 90% is Wi-Fi. Right. And that's because 70% of all the bits going over the internet right now are streaming. And streaming wasn't here 10 years ago. So I sit here and say the most exciting thing about our company is what's coming in the next 10 years that happens in innovation around the world, hopefully here in America, hopefully Silicon Valley and LA and everywhere else, Philadelphia, and that we're going to continue to have bits per home go up.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to the opening trade. We are 46 minutes into today's session. It is Tuesday, the 11th of February. The European equity session then, modest gains, really quite flat actually across European stocks. There's a lot going on though. The European Union has said it will respond to any tariffs the US might impose on it, escalating a potential transatlantic trade dispute. Joining us for more is Bloomberg's Oliver Crook, who's following the details here. So we've heard from Ursula von der Leyen, we've heard from Maroš Šefčovič, the trade commissioner then, Ollie. What do we think Europe is going to do in response to the US?
Yeah, that's right. We've also heard from Olaf Scholz, who was speaking in the Bundestag a little bit earlier. I'll just summarize some of the things that they've been saying. They've all been having a pretty consistent message, all came out more or less sort of in unison, saying that basically, of course, this is a lose-lose situation. This is going to harm the United States. This is going to harm Europe, really sort of making all the arguments for free trade that they always do. Of course, these are arguments that don't cut a whole lot of muster with the Trump administration. What we know so far in terms of what the countermeasures will be is we don't know what they will be specifically. All we got from Ursula von der Leyen is that the tariffs were unjustified on the EU. They will not go unanswered, that they will trigger firm and proportionate countermeasures. Again, taking all of the trade action we've seen over the last few weeks, the Europeans have obviously closely watched what happened with Canada, closely watched what happened with Mexico, trying to appraise basically what this is in terms of the negotiation tactic. What is it that Donald Trump wants? Of course, on the issue of trade, there's a large trade surplus between the EU and the United States. Last year was about $230 billion. That is, of course, part of what Trump wants to close. But the question is, how much of this will spill outside of the world of trade? How much will this be used by the Trump administration, potentially not just to get the Europeans to buy more oil and gas and that sort of thing, but potentially to not regulate U.S. tech companies? Could the sort of question of Greenland come into play? I mean, these are all of the things that people are going to be thinking about over the next couple of days and weeks. And of course, all ahead of the Munich Security Conference at the end of this week, which will be the first high-level meeting between the new Trump administration and the Europeans.
So, Ollie, what might the potential options be here in terms of countermeasures? I mean, I know we hear this word quite a bit, but the criticism of that is, does Europe even have any levers to play?
I mean, listen, they have a couple levers to play, but at the end of the day, the trade surplus in goods with the United States is $230 billion. So that is the chip that the United States is playing with, and they know that, and that is the thing that they want to close. I mean, what we saw last time that this came around, the first Trump administration, there were countermeasures that sort of targeted motorcycles, Harley-Davidsons, jeans, bourbon, but that's not really the same sort of size of scale. When you think also about sort of proportionally these tariffs, who is it going to hurt the most? You see you see the Bundestag there, you see the Germans. You look at the sort of steel exports to the United States. Germany is the 7th largest in terms of the steel exports that go to the United States. It's about $3 billion. So it's going to hurt the Germans most, obviously, in going into this election campaign. But again, there are other measures. I mean, there's also the question of services, for example. The U.S. runs a pretty large services surplus in terms of trade with the European Union. Could they find a way to target that? These are all going to be sort of in play. But again, I think at the end of the day, what they need is to hear what actually Trump wants and what they're willing to give.
Yes, and we're just looking, as you said, Ollie, we're looking at live pictures of the Bundestag and these conversations ongoing. We had seen Olaf Scholz, the Chancellor, speaking there just a moment ago. So we're hearing from these various German leaders, and that puts me in mind of the fact that we're very close to a German election, Oliver, and we're looking for European governments to respond strongly in the face of these tariffs from the United States. And we have a government in France, and we have a prime minister installed and a budget, but we are working our way up towards big political events in Germany.
Yeah, exactly. And a very sort of diminished, let's be honest, diminished France, diminished Germany. I mean, no matter what comes out of this election, unless there's a real shock on election day, you're going to have a sort of coalition that is going to be very sort of shaky potentially. And the number 2 party, of course, is a party that wants to withdraw Germany from the Eurozone, from the EU. And that is not the sort of rhetoric that we've heard from some of the other candidates. I mean, even Friedrich Merz, who did align himself on this one immigration policy with the AfD, was very explicit in the debate over the weekend that the only way to move forward for Germany is have more integration, or at least have a stronger consensus building at the European level, because at the end of the day, Germany, France, Italy, none of these countries can compete against the United States, against China. So there is a consciousness there, but at the same time, with all the sort of fragmentation within German politics, but also French politics, with some of these forces that want to sort of move in the opposite direction, I think it makes it a very sort of difficult needle to thread, particularly when you feel all this sort of economic insecurity as you do in Germany, particularly, again, with a 3rd year of contraction, and potentially these tariffs looming is only going to be even more powerfully damaging to the German economy. The only silver lining potentially is that this may actually force the government, the politicians, to make compromises, to say, listen, this is a really dire situation. Maybe we look at the debt brake. Maybe we look at other ways to stimulate the economy, because at the end of the day, this is going to hurt Germany the most.
It's certainly something we're going to be keeping a very, very close eye on. We know it's going to keep you busy as well. Bloomberg's Oliver Crook, we thank you so much for walking us through the stories and the narrative, certainly coming out of Berlin ahead of that election in less than 2 weeks' time. On the topic of staying competitive, specifically in Europe, perhaps France having a bit of a closer shot at this, especially when it comes to the AI summit at the moment. We are getting live pictures, I believe, from the Grand Palais in Paris. We are getting, awaiting, I should say, the arrival of Emmanuel Macron. He made some comments at the summit yesterday, and we did see Justin Trudeau attending the summit as well. We do know that Vice President J.D. Vance is going to be speaking, I believe, at 9:30 a.m. UK today. And at the moment, on your screen, you are seeing the French foreign minister awaiting that Macron arrival. But Anna, the conversation there has very much been quite similar. How do you invest in AI? Is the Trump playbook of attracting investment, perhaps on a smaller scale, the way to go.
Yeah, European competitiveness. What can Europe do to make itself more competitive? What can Europe do in the face of tariffs from the United States? We know that President Trump doesn't like the way that Europe regulates the tech sector. And so you wonder, Ollie was giving us a long list of items that Europe might have at its disposal to throw at the Americans to suggest, maybe we could give you this. And they've said the lines of communication are open. Is there something around tech regulation that could be employed to try and please the U.S. administration? That could be something that no doubt is being discussed, at least in the halls of the Grand Palais over in Paris.
Yes, at the same time that we know that France has decided to keep its digital tax as well. That was one of the major headlines coming out of the AI summit yesterday as well. So that's going to be something we're keeping a very close eye on.
Yeah, let's run through some of the other things that are going to be happening. We're waiting for J.D. Vance, of course, the Vice President, to speak at that AI summit. That'll be happening in the next hour. Here are some of the other things we're focused on. From the UK perspective, Andrew Bailey is going to be speaking today. We've already heard from Catherine Mann speaking over at the Bank of England, so she's giving a speech at the moment. We've got the Fed's Powell testifying to the Senate Banking Committee. We'll get CPI data out from the United States, as well as some earnings stories. Banco BPM of more interest than usual, perhaps, because of the Italian banking consolidation story, and Coca-Cola AIG over in the United States. Let's return to that news about the EU saying it will respond to any tariffs from the United States that might be imposed on the bloc. Let's get a markets perspective. Bloomberg's Valerie Titel is with us. Valerie, we've been talking to Ollie then about some of the politics, some of the levers that Europe might try to pull. I mean, I was going to ask how Europe is digesting this. Overall, if you look at sort of Stock 600 as any measure of risk appetite, it's not moving this morning. It's pretty flat.
Yeah, so if we now go into a tit-for-tat trade war, the emphasis goes from maybe the FX market to the risks market here in Europe for equity markets, right? For both sides of the Atlantic, frankly, not just in Europe, but also in the U.S. if we enter into this tit-for-tat escalation. And for now, we have, basic resources in Europe to the downside, but generally there doesn't seem to be a big risk-off reaction to this. I also have my eye on gold. There wasn't necessarily any reaction in the yellow metal and the precious metal to these announcements, and that's something that has been a safe haven play in the last few weeks. And you guys have talked about this in the last hour, that the big move to the upside in gold this month. But it doesn't seem like it's reacting very much to this news. It does seem very muted. But I think it's very interesting, Anna, that we're getting something out of the EU even before Trump announces this reciprocal tariff that he has talked about in the last 2 days. The announcement could come today or tomorrow. Seems like the EU just wants to get in a better negotiation position probably before the next step of tariffs come around.
Hurt already by steel and aluminium, perhaps, I suppose.
Yeah, and I think it's very timely that we're now starting some comments coming out of major European companies talking about how they could really deal with that tariff risk. We're seeing comments coming out of the Kering CEO saying they may review their pricing strategy if U.S. tariffs are imposed, and they have no plans to produce in the U.S. to counter those tariffs. At the same time, we're getting headlines out of the BOE's Catherine Mann, I believe the first time since she made kind of that 180 on that decision split. Walk us through the comments.
Look, this is the arch hawk turned arch dove, the one to vote for a bigger cut. Last week, there was two on the council that did vote for a bigger cut. She was one of them. A lot of attention on that just because she has been so hawkish previously. But she has, she said in the FT article she wrote this morning, she's repeated this lines in her speech this morning, that the vote is about risk management and communication. She is worried about the downside risks to growth. She is not worried about the upside risk to inflation. And she thought that a bigger cut last week would be a good signal to the markets, to the economy, that the Bank of England is there and watching. It's funny to see the comments from Andrew Bailey, though, last week. He said, don't look at the vote count, don't put too much weight on the voting, but the market very much did. This opens up the door to perhaps a big dovish shift, maybe an acceleration of cuts from the Bank of England.
She was clear that she wanted looser financial conditions, and at least in the very moment after she voted for them, that's what she got. The market did respond to her voting pattern.
Yeah, we'll see if that continues, and maybe what the more further rationales as we get more of those data points. Bloomberg's Valerie Titel walking us through the BOE story, and of course that tariff reaction. As we're speaking, or as Valerie was speaking, we are seeing Kering shares pair some of those gains, especially a lot of those comments coming on how they're going to be responding to those Trump tariffs. That does it for the opening trade. The Pulse is up next. Stick with us. This is Bloomberg.
our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
The EU says it will impose countermeasures against US tariffs as Donald Trump slaps a 25% levy on all steel and aluminium imports. European earnings in focus. Unit credit falls with its profit outlook flat, but Kering gains on signs the worst may be over for the Gucci owner. Plus, no thank you. OpenAI CEO Sam Altman rejects a bid from a group of investors led by Elon Musk, escalating the billionaire's feud. Welcome to the program, everybody. Let's have a quick look at where we are on the European equity map. Overall, markets are pretty flat, but boy, is there a lot happening this morning, and there is a lot going on beneath the hood. In terms of the overall markets, we're flat. Stock 600 is pretty flat. The FTSE's flat. The IBEX is flat. A little bit of upside coming through on the CAC 40 and the Xetra DAX. Let's have a look at some of the other assets, just to give you a sense of where we are heading this morning. The futures picture then. S&P futures are down by 0.25%. This is the extent to which we're seeing risk off this morning on confirmation of those tariffs on certain metals coming through from the United States, and then the promise of retaliation as yet undetailed from the European Union. US 10-year yield is at 4.51%, so yield's a little bit firmer this morning. The US dollar is pretty flat this morning, and gold caught another bid. We had a lot of volatility through the Asia session. In fact, we touched another high on gold. Let's get the program started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Anna Edwards in London, in for Francine Lacqua this morning. Now, within the last hour, the European Union has said it will impose countermeasures against US tariffs. This follows President Trump's 25% tariff on steel and aluminium imports from all foreign suppliers. The levy will go into effect from March 12th.
So essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States.
President Trump also warned there are more trade barriers on the way, with cars and chips potentially the next targets. For more, let's bring in Bloomberg's EMEA News Director, Ros Matheson, who daily, Ros, you're on Tariff Watch and Tariff Alert, tracking the twists and turns of this story. Let's go to the European response first, shall we? Because this is the latest information that the market is dealing with. I suppose it's not a surprise in that Europe has suggested in the past that it might respond. But what do we make of the European response this morning?
Well, as you were saying, Europe has made clear that it's had this stuff in its arsenal. It's got lists prepared and it's ready to act if needed. But, taking a very careful approach to wait and see how Donald Trump was going to come at Europe specifically and when. And now we have obviously the news that this 25% tariff will take effect unless there are, again, exemptions or changes of mind, because we've seen that happen before with Canada and Mexico and also possibly in Australia. So does Europe also navigate a pass? And so we're seeing some strong language today, but also some fairly careful language, because they obviously want to leave room for there to be a negotiation between now and the 12th of March.
Yeah, and the Australian example, I think we're right to linger on it a little, Ros, because I think this is fascinating. It gives us a little bit of an insight into the types of arguments that might hold sway in Washington, because I understand that the Australians think they've got some sort of pass here because of the number of aircraft that they buy. So, that gets us looking for the Boeing export map and seeing who else might get an exemption.
Well, that's right. It's interesting to see the behaviour of each country, the way they're approaching Donald Trump on this. We saw Canada and Mexico be quite firm when tariffs were first announced, particularly Canada announcing countermeasures immediately, but also then behind the scenes looking for a way to negotiate and to say, okay, we will give Donald Trump something so Donald Trump can claim a win out of this, whether it's something to do with the borders, obviously, for Mexico and Canada on fentanyl or security. In Australia's case, saying, hey, look what we've got for you. So Donald Trump can say, well, I've extracted something from you and therefore I can hold off on these tariffs. And that seems to be how he wants to operate. You can see China taking a different tack, which is to say, fine, we are going to put tariffs on you in turn. We're going to hold off on having a phone call. That conversation seems to be crucial. Xi Jinping not necessarily having a conversation with Donald Trump about these tariffs. The leaders of Canada, Mexico, Australia opportunistically getting in there very quickly, and possibly now Europe. I mean, that's the question. Does Ursula von der Leyen need to pick up the phone to Donald Trump?
Yes, and talk to us about the status of that conversation then between the Chinese leadership and the US president. For a number of days we were on, phone call watch to see whether this call was taking place, what would transpire. The Chinese now, one assumes, dealing with tariff upon tariff from the United States, and are they talking?
Well, it's a bit unclear what conversation, again, Donald Trump was referring to. It's a bit like his comment that he has been speaking with Vladimir Putin from Russia. The question is exactly when have these conversations happened? Is he actually referring to a conversation with Xi Jinping that happened before he was inaugurated and not most recently with the tariff news? There's no indication from China that Xi Jinping has in fact spoken to Donald Trump since, and specifically about tariffs. And so that's again the question, is Xi Jinping holding fire, and for what reason? We do know there's a lot of conversation going on at a lower level between China and the US, sort of back-channeling going on, and does Xi Jinping feel he needs to be in the best position to actually have that phone call?
Ros, thank you very much. Thanks for bringing us up to date. Ros Matheson there with the latest on trade tensions. Let's turn to the AI story, another theme we're watching very closely this week, and that the theatre of that conversation has, of course, moved to Europe. We'll be here with coverage of the of that summit in Paris in a moment. But OpenAI CEO Sam Altman has rebuffed a $97 billion bid from a group of investors led by Elon Musk to buy the non-profit that controls the ChatGPT creator. Joining us now from that AI Action Summit in Paris is Bloomberg's Tom McKenzie. Tom, of course, all things AI, the subject of this conversation that you're having over in Paris. In fact, it looks as if we might have lost our connection with Tom, which is unfortunate. We are, though, seeing live pictures coming to us from the summit that's taking place in Paris. So this is an AI Action Summit, as the name suggests, and the delegates gathered. We understand that Justin Trudeau is there. In fact, we've had some lines from Justin Trudeau just crossing in the last couple of moments, saying tariffs on on Canadian steel and aluminium are unjustified. Canada's response will be firm and clear. So the Canadians seeing the need to respond to those sectoral tariffs that we've seen on some of those metals. So we understand that Justin Trudeau is there. We know that J.D. Vance is there. He has been spotted on the ground, and we know that he's going to be addressing the audience there. So the Vice President on the global stage, holding a number of important bilateral meetings whilst he's there, but also giving an interesting insight into his thinking around some of these important AI issues and perhaps some of the tariff stories and beyond. We will try and reinstate our connection with Tom coming up on the programme. We'll return to Paris in just a moment, plus we dive into how markets are reacting to the latest tariff news, as well as set you up for the Fed conversation ahead. We'll look ahead to Fed Chair Jerome Powell's testimony at the Senate later today. That conversation is next. This is Bloomberg.
Day. Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Up-to-the-minute global financial news whenever and wherever it happens. I'm Jonathan Ferro.
And I'm Lisa Abramowitz in Davos, Switzerland, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
On February 23rd, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in February 23rd, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Welcome back to The Pulse. I'm Anna Edwards in for Francine Lacroix this morning. So we've heard from Elon Musk. He's interested in bidding for OpenAI. Sam Altman at OpenAI says, no, thank you. Joining us now with the latest on that story and the latest on the AI Action Summit, which is taking place in Paris, Bloomberg's Tom McKenzie, who is surrounded by the great and the good of the tech scene, and so well placed to comment on this story. How serious is then Elon Musk, when he says he's interested in buying OpenAI? What do we understand his motivations to be?
I think we have to take Elon Musk seriously. The wealthiest man, of course, on the planet, someone who has the ear of the US president when he makes this bid. He's also lined up a number of big-name investors behind this bid, again, according to reporting from the Wall Street Journal. So I do think we have to take this seriously. What his motivations are, the clarity there is a little lacking at this point. What we do know is that, of course, he was one of the founders of OpenAI back in 2015, along with Sam Altman. They have, of course, pretty dramatically fallen out. They are in a legal battle as well. This is a step change from Elon Musk in terms of the pressure that he's putting on OpenAI. It's another gear shift in that feud with Sam Altman. Exactly what he wants to get out of this, still unclear, but certainly I think the team at OpenAI and the investors behind Elon Musk and those invested in OpenAI should be and probably will be taking this fairly seriously.
Yeah, we're looking at pictures of where you are, Tom. We're looking at Emmanuel Macron, the French president. We're looking at the Indian leader, Narendra Modi, who I know is going to be speaking at this event. So many global leaders there, many leaders from the tech industry there. And I think OpenAI, Sam Altman, is amongst them. What is the conversation? How is the conversation going to evolve at this AI summit today?
Yeah, absolutely. The Indian Prime Minister has just walked in with President Macron just behind me, and prior to that, the J.D. Vance, the Vice President of the United States, of course. So they are here in terms of the leaders and the executives, as you say. It ties back to that Musk story around the bid for OpenAI, because this is a reminder that this is an arms race within these startups, within these businesses, but also an arms race at a sovereign and nation-state level as to who gets to control and shape the progress of artificial intelligence. And the debate on the ground here is very much focused on that area. Should it be open or closed models? Should it be sovereignty first or startup first? Should it be about infrastructure or the value add? All of these are part of that conversation, and Musk's bid for OpenAI just accelerates and underscores that this is a national and international arms race right now. Macron was speaking yesterday. He was touting France's position and trolling to some extent President Trump, saying, look, we don't need to drill, baby, drill here in France. We just need to plug in because of the abundance of nuclear power. France also has a lot of software engineers. Europe does as well, well positioned on that front. This is clearly a France and this is clearly a European Union trying now to play catch up to the advances and innovations that we're seeing not just in the US, but also in China. And Chris Lehane of OpenAI talking to me yesterday saying that those are the two leaders, the US, and he described it, the Communist Party of China, and he wants to see democratic nations leading the charge on this. But this is a live debate. Who controls, who shapes it? Elon Musk to OpenAI, he's saying they have moved away from their mission around safety-focused open AI models, and that's why he continues to pressure that company.
Okay, Tom, thank you very much. Bloomberg's Tom McKenzie joining us there from Paris. We'll be back with Tom later this hour for an interview with the co-founder and chief executive of Hugging Face. Yes, that really is the name of that company. And the co-founder speaking to Tom a little bit later on in programming. Now, stocks wavering this morning as the latest tariff news spurs caution among traders. Investors are also looking ahead to testimony from the chair of the Federal Reserve, Jerome Powell, and key U.S. inflation data. Lots to discuss then with Sharon Bell, senior European equity strategist at Goldman Sachs. So I guess I'll start with the tariff story and then maybe pivot back to some of the AI and tech themes that we're dealing with this week as well. Sharon, I mean, we've seen tariffs imposed for the first time on Europe by this new Trump administration. And then we see Europe saying we will respond, and the stock 600 is doing absolutely nothing. I mean, does this speak volumes about what we've already priced in, about what we learned from 2018? What does this tell us, Sharon?
I think both a little bit. In 2018, to the tariffs then, what we did see is the EU react, but react very proportionately, let's say. In fact, we think the sort of message from 2018 is that they only tend to tariff in retaliation about 50% of the value of goods that they were originally tariffed on. So in a sense, I would absolutely expect retaliation. That's what they've said. The market was probably discounting that as well, expecting that retaliation. Also, as you showed earlier, the EU isn't the biggest trader in steel with the US either, so the impact isn't going to be as large as maybe for other places.
Okay, and so I suppose in terms of risk sentiment for equity markets, if we see the European retaliation going toe-to-toe with the US, then that might be risk negative, because that would be something that would suggest this time around Europe's doing it differently.
Yes, they're reacting more. I agree. I mean, that would be a bigger reaction than expected. I feel the market is expecting. And you know, China's already reacted as well to Trump's 10% tariffs on goods, additional 10%, and they too reacted in quite a proportional way. So I think that is now the pattern that's expected and discounted by markets. So if you saw a bigger reaction by the EU, it would be seen as upping the ante on the trade war.
We've just been looking at live pictures coming to us from Paris. I mean, Emmanuel Macron certainly managing to gather the great and the good of, well, global politics to some degree, and also plenty of tech leaders to try and pitch Europe's role in the tech space. Sharon, when you look around for investable opportunities in tech in Europe, are you seeing things change? Are we starting to be able to talk about Europe having more of a tech presence? Clearly, there are big names. We've talked about SAP and the like for a very long time.
Yes,
but how is that evolving?
There are a few big names in Europe, but it's a tiny portion of European market cap. Something like 6 to 8% of European market cap is in tech, whereas in the US it's a third of market cap in the tech sector itself. And then there are other companies in other sectors that we probably would regard as quite techy as well. So it's much smaller in terms of the overall equity market and much smaller in terms of the economy. But we know that Europe wants to make progress on all these investments. So this is a good sign that you're starting to bring the leadership to Europe.
Yes, and then we have the French president then welcoming everybody, no doubt, and giving some opening remarks on this second day of the AI Action Summit in Paris. In terms of European stocks then, let's go back to that broader picture. We've seen real outperformance here today from Europe, haven't we? I mean, Stock 600 up 8% or so, US stocks up 2% on the NASDAQ, 3% on S&P. Does that look justified? Does that continue, do you think, Sharon?
I know. It's been such a surprise to many investors. When we polled investors at one of our conferences in Hong Kong and another one in London in the middle of January, very few investors expected Europe to be the best performer. Now, to be fair, we asked them the question for the whole of 2025, and we'll see if that's maintained, this performance. But it has certainly been a surprise to a lot of investors that we've spoken to that Europe has done quite well since the beginning of the year, particularly because actually the economic data in Europe still doesn't look that rosy. We haven't really seen any of the fundamentals change hugely. But what I do think has changed a little bit is this idea that, in the end, the US has also got some issues too. Tariffs could be inflationary, for example. There's concerns now with DeepSeek and how that's going to impact the tech industry in the US. Also, investors were already positioned and in the US market, it's very concentrated, very highly valued. So it's a little bit of, I think, investors diversifying.
Yes, okay, so that suggests that maybe there was something for the US to lose as well as something for Europe to gain in terms of what we're seeing in markets. I wonder if we look ahead to the end of this week, we're going to be in Munich for a security conference.
Yes.
And I wonder whether the markets are starting to think about, and I noticed that we'd seen year to date some quite good performance from quite a lot of businesses in Eastern Europe, and I started to wonder whether the market is starting to ask itself whether we get a peace dividend out of Ukraine.
Yeah.
Is that something that's realistically on your radar? Is it too early for that?
It's certainly on all investors' radars at the moment, because in the last couple of weeks, you've definitely seen some of the stocks with perhaps most exposure maybe doing a little bit better. I do think that markets may be getting a little bit ahead in expecting that armistice or peace in Ukraine, because really we may still be a long way from that point. But I do agree with your point that if you were to move more in that direction, if we were to see that, that would clearly be good news for European economies, because likelihood that gas prices will come down a bit, that's very helpful. Also, you don't want a war on your doorstep, and all the financing that requires. So again, I think it would be helpful for Europe because it would bring down the risk premium. So all of those things, I think, would be helpful. And bear in mind, the European economy has been incredibly weak growth for the last few years, and particularly since Russia invaded Ukraine. So again, I think all of that would be a great signal if it were to happen.
Yeah, it necessitated such a huge structural shift in energy supply, didn't it? That the growth was taken out as a result. Thank you so much for joining us, Sharon. Nice to see you. Sharon Bell, Senior European Equity Strategist at Goldman Sachs. Coming up on the programme, we'll stick with the energy theme, in fact. Oil and gas giant BP has reported a sharp drop in profits and is pledging major changes to its performance strategy. We'll get to that next. This is Bloomberg.
income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome back. There's been a muted response in markets to BP's earnings today. This is the oil and gas giant pledges major changes at its upcoming strategy update after reporting a sharp drop in profit. For more, let's get to Will Kennedy, Bloomberg Senior Executive Editor for Energy and Commodities. So, Will, I know the buyback was going to be a focus for today. They maintained that. What stood out to you then from the BP earnings?
Well, the earnings were a little weaker than expected, but I think the most interesting thing we saw was actually the words that the CEO, Moen Elkenschloss, used in the update, which to say the company needed a fundamental reset. So all eyes now in 2 weeks' time when he delivers his capital markets update, where he's clearly going to set what he claims will be a radical new direction for the company.
Yes, and so that looks less green, does it, in short, the future?
I think that's certainly the way that it's going. He's already sort of tried to reposition the company away from the very major green direction set by his predecessor Bernard Looney, which was going to radically reduce oil and gas production and invest a lot of money in new energies. He's backed away from that. I think we can assume he'll back further away from that. Maybe announce some divestments of non-core assets to help buybacks.
Yes, and I guess we're trying to find out what it is that Elliott Investment Management wants before we get to that investment day.
Absolutely, and presumably they'll be talking. I think that they probably want something along those lines. They see that the company is undervalued and they think it's on the wrong strategic track, and they'll want measures that unlock some of that value, and that probably means really focusing on the core business and maintaining capital discipline.
Okay, well, thank you very much, Will Kennedy, Bloomberg Senior Executive Editor for Energy and Commodities. Coming up on the programme, we'll go from the banking sector to the banking sector. UniCredit boosts investor payouts, but shares fall on fourth quarter earnings. We'll break down the numbers from the Italian bank. That conversation next. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Good morning and welcome to The Pulse. I'm Anna Edwards in London, and these are your top stories. The EU says it will impose countermeasures against US tariffs as Donald Trump slaps a 25% levy on all steel and aluminium imports. European earnings in focus. UniCredit falls with its profit outlook flat, but Kering gains on signs the worst may be over for the Gucci owner. Plus, no thank you. OpenAI CEO Sam Altman rejects a bid from a group of investors led by Elon Musk, escalating the billionaire's feud. Thinking of all things tech, I should tell you that we are live at the Tech Summit in Paris. We'll be getting the latest from that AI Summit in Paris. Narendra Modi is currently speaking. The Indian Prime Minister, just one of the heads of one of the world leaders that we have in attendance. Justin Trudeau, the Prime Minister of Canada, also in attendance. So many conversations being had on the stage and behind closed doors, no doubt, as well. Those one-on-one conversations, all important. We know J.D. Vance is in the building as well. Let's turn from the European tech agenda to the European growth agenda. We're just getting lines coming through this morning from the IMF. Kristalina Georgieva is speaking at a summit in Dubai and saying that the US economy will likely continue being strong, but then goes on to say that she's particularly concerned about the European economy. And as we're thinking about AI over at that Paris summit, really interesting to see her thoughts on AI rather than focusing on the positives. One of the lines coming out of her statement, her address, is the IMF chief saying that AI is a tsunami hitting the labour markets. We will see how the labour market withstands that kind of pressure. So lots of lines coming through then from the IMF this morning. Let's return to that news about the EU saying that it will respond to any tariffs that the US imposes on the bloc. For more, let's bring in Bloomberg's Valerie Teitel, who's been tracking the twists and turns of this over the last 24 hours. Valerie, how are markets digesting this news?
Look, Anna, so far the markets are taking it in stride. They're saying no big surprise from the EU's announcement about retaliating to the US's tariff announcement on steel and aluminum. We have the Euro Stoxx 50 unchanged, euro dollar in the FX market broadly unchanged, and gold, which has been the safe haven of choice lately, also unchanged. Let's return to that gold story, though, because it has had a phenomenal rally in the first 6 weeks of the year, up some near 11%. A lot of this due to some safe haven demand, this tit-for-tat trade war escalation. This has been the safe haven of choice, Anna, but it seems like it's not very much reacting to the news today. What it could perhaps react to is some later announcements from Trump when it comes to the reciprocal tariffs. He has told us in the last last few days that they are preparing an announcement on reciprocal tariffs to come either today or tomorrow. Bloomberg Economics did some great analysis on which economies are most exposed to reciprocal tariffs. They pointed out that it's mostly EM economies of Brazil, Latin America. You've got Africa and India being the most exposed. But I believe it'll be what he says in this announcement. Does he focus on the European Union in this announcement of reciprocal tariffs? We know he's had his eye on the European auto market. Does he perhaps tag that into that announcement of reciprocal tariffs? That could be some downside for the EU and perhaps another reason for the EU to respond with more tit-for-tat tariff retaliation.
Okay, Valerie, thank you very much. Valerie Teitel with how the markets are withstanding pressure, standing up to the pressure that has been applied by President Trump and his tariffs and countermeasures then planned and suggested by the European Union. Let's return to all things tech. The LinkedIn co-founder, Reid Hoffman, Hugging Face Chief Executive, Clem Delang are among notable CEOs, entrepreneurs and venture capitalists to have signed an open letter calling for the creation of new global public goods in AI. This comes as world leaders and tech giants meet in Paris for the AI Action Summit. Bloomberg's Tom McKenzie is there for us. Tom.
Anna, thank you very much indeed. Yes, we'll ask about public goods with Clem Delong shortly, but we'll start with the news of the day as well, Anna. Clem Delong, as you say, the CEO and co-founder of Hugging Face, joining me here at the Paris AI Action Summit. Clem, thank you for your time.
Thanks for having me.
And we're going to get to that point that Anna was talking about in terms of public AI and what it actually means. But I want to start on the news of the day, Elon Musk's bid for open AI. Do you take this seriously? What could it mean for your space?
Well, I think it's an interesting conversation to have, right? A lot of people are talking about openness in AI these days and public goods here at the summit. So it's an interesting conversation to have about, open AI and kind of like their non-profit goals and how they can contribute to humanity.
Do you have a strong view? I mean, Elon Musk would say that they've diverged from their original founding mission of producing non-profit, safety-first AI that is open source. Do you agree that they've diverged from that and that's a problem?
Well, I think OpenAI have the ability to really contribute massively to the world. They obviously have already, but I would be really excited to see them doing more open science and open source AI. I know that Sam Altman commented on it a few days ago, saying that they were considering doing more open source AI. I think that would be amazing for the world when you're seeing what DeepSeek has managed to do with an open source AI approach. You see some of the potential of scale of impact that this kind of approach can have.
So you think that's the direction of travel? Because you, of course, are a big advocate for open source. Yes. Not only do you build your own software, but you provide that platform for researchers and developers to access the latest models. So you think, ultimately, in the next year to 2 years, Google, OpenAI, Anthropic, they'll have to move to open source. That's the direction of travel right now.
It's possible because it used to be the case in AI. If you're looking at the time period like 2016 to 2020, most of AI was actually open science and open source AI, and that really fueled the progress, right? This idea that Google released a paper called Transformers that then OpenAI used to build GPT, kind of like create this virtuous cycle where you accelerate the progress of the technology. So hopefully if we can do that more in the next few months, I think it'll be beneficial to AI and to the world.
Demis Hassabis from Google DeepMind told me yesterday he thinks that DeepSeek have misstated and exaggerated the extent to which they were able to build that model at a low cost. Do you agree with that assessment? You've played around the model, you've integrated it, you're using it. Do you agree with that assessment?
I think it's more like the media and kind of like the public comments that exaggerated it a little bit. But if you look at the research paper, they
this is our fault, is it? We exaggerated.
Yes. But if you look at the research paper, what they said that the last round of training for the model cost $6 million, it seems to add up. At Hugging Face, we're doing fully open source replication of R1, allowing anyone to train their own R1. And we're seeing that what they stated in their research paper and what they released at Open Weights makes sense and is accurate.
Okay.
As a matter of fact, what's been interesting to see is that thanks to their very open release, people are building on top of it all over the world.
Are you worried about data privacy and cybersecurity risks around DeepSeek?
So that's part of the replication. That's going to be very interesting, and I was actually talking to Demis yesterday about this. When we're trying to replicate R1, which is made possible by the open
latest
source
model, DeepSeek's latest model is R1.
Exactly. We'll be able to see if there are any kind of like safety issue from the model. It doesn't seem likely, but it's always an interesting study, especially to be able to do it for like the next models, right? Because we're starting to see, I think, is like the safety risks of open source AI are quite inexistent for the current generation of AI, but maybe in a couple of generations, there's going to be more important issues to look at.
You've called, as Anna was saying, you've called for a focus on AI for public goods. What does that mean? Does that entail health data being packaged up in a safe and secure way? Privacy data? What are the concerns around the data? What does it mean? What data should be packaged up as part of public goods AI?
I mean, I think public goods means that not only the private sector can kind of like play a part in AI, but that public organizations, non-profits, civil society need to turn from being AI users to being AI builders themselves so that they can shape the direction of the field. Right? I don't think it's healthy. I don't think it's sustainable for a world where the most foundational technology is only controlled by a couple of like big technology companies. We need to kind of like make it more available, understandable, and controllable by any sort of organization. So I'd be really excited to see more governments, more public organizations, more non-profits, more civil society being able to build their own models. Why not think of like the next DeepSeek coming from a public organization, from a non-profit, from kind of like civil society? I think that would be really cool for the world.
Clem, what are your fundraising plans? Are you an acquisition target? Are you IPOing this year? Where are you on fundraising IPOs?
None of the above.
None of the above?
We're lucky.
People have tapped you on the shoulder, haven't they, Clem, and made an offer?
We're lucky to probably be one of the few AI companies that is profitable.
You're profitable?
Yes, we are. We have tons of money in the bank. So at the moment, we're focusing more on kind of like building the platform for AI builders in the long run, to take a very long-term approach, and very happy and grateful to be in this position.
An IPO is still the goal?
Yes, to stay independent, because I think there's room for independent AI platform for builders all over the world. So that's the goal.
Could that be in the next 24 months?
No, probably not. Just because we don't need to. As I was saying, kind of like we're profitable, and AI is still, in my opinion, it's in its very early stages. Right? Even if we're talking about it a lot, even if there are now billions of users of AI, the technology landscape is still changing so fast, right? We're seeing that with DeepSeek.
Okay.
So our goal is really to kind of like reinforce our position as the most used platform for AI builders, and we're happy to do it like
Clem
that.
Delon,
CEO and co-founder of Hugging Face. Thank you very much indeed. Straddling Europe and the US, of course, headquartered in New York. Anna.
Thank you very much. Yeah, Hugging Face with tons of money in the bank. A nice line there from the CEO of Hugging Face. Thanks to Tom McKenzie at the AI Action Summit in Paris. We'll take a short break. Coming up on the programme, we will have more on those UniCredit earnings. That conversation is next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Welcome back to The Pulse, day 2 of the AI Action Summit in Paris, where the US Vice President, J.D. Vance, is giving a keynote speech in front of a number of world leaders, Canada's Trudeau, India's Modi, CEOs like the OpenAI CEO, Sam Altman is there, Alphabet's Sundar Pichai. Let's just listen in for a moment.
And finally, number 4, the Trump administration will maintain a pro-worker growth path for AI, so it can be a potent tool for job creation in the United States. And I appreciate Prime Minister Modi's point. AI, I really believe, will facilitate and make people more productive. It is not going to replace human beings. It will never replace human beings. And I think too many of the leaders in the AI industry, when they talk about this fear of replacing workers, I think they really miss the point. AI, we believe, is going to make us more productive, more prosperous, and more free. The United States of America is the leader in AI, and our administration plans to keep it that way. The U.S. possesses all components across the full AI stack, including advanced semiconductor design, frontier algorithms, and of course, transformational applications. Now, the computing power this stack requires is integral to advancing AI technology. And to safeguard America's advantage, the Trump administration will ensure that the most powerful AI systems are built in the U.S. with American-designed and manufactured chips. Now, just because we're the leader doesn't mean we want to or need to go it alone, of course. And let me be emphatic about this point. America wants to partner with all of you. And we want to embark on the AI revolution before us with the spirit of openness and collaboration. But to create that kind of trust, we need international regulatory regimes that fosters the creation of AI technology rather than strangles it. And we need our European friends in particular to look to this new frontier with optimism rather than trepidation. Now, the development of cutting-edge AI in the U.S. is no accident. By preserving an open regulatory environment, we've encouraged American innovators to experiment and to make unparalleled R&D investments. Of the $700 billion, give or take, that's estimated to be spent on AI in 2028, over half of it will likely be invested in the United States of America. Now, this administration will not be the one to snuff out the startups and the grad students producing some of the most groundbreaking applications of artificial intelligence. Instead, our laws will keep big tech, little tech, and all other developers on a level playing field. Now, with the president's recent executive order on AI, we're developing an AI action plan that avoids an overly precautionary regulatory regime while ensuring that all Americans benefit from the technology and its transformative potential. Now, we invite your countries to work with us and to follow that model if it makes sense for your nations. However, the Trump administration is troubled by reports that some foreign governments are considering tightening the screws on U.S. tech companies with international footprints. Now, America cannot and will not accept that, and we think it's a terrible mistake, not just for the United States of America, but for your own countries. The U.S. innovators of all sizes already know what it's like to deal with onerous international rules. Many of our most productive tech companies are forced to deal with the EU's Digital Services Act and the massive regulations it created about taking down content and policing so-called misinformation. And of course, we want to ensure the internet is a safe place, but it is one thing to prevent a predator from preying on a child on the internet, and it is something quite different to prevent a grown man or woman from accessing an opinion that the government thinks is misinformation. Meanwhile, for smaller firms, navigating the GDPR means paying endless legal compliance costs or otherwise risking massive fines. Now, for some, the easiest way to avoid the dilemma has been to simply block EU users in the first place. Is this really the future that we want? Ladies and gentlemen, I think the answer for all of us should be no. Now, there's no issue where we worry about more than regulation when it comes to energy. And again, I appreciated the comments of so many at the conference because they recognize that we stand now at the frontier of an AI industry that is hungry for reliable power and high-quality semiconductors. Yet too many of our friends are deindustrializing on the one hand and chasing reliable power out of their nations and off their grids with the other. The AI future is not going to be won by hand-wringing about safety. It will be won by building, from reliable power plants to the manufacturing facilities that can produce the chips of the future. Now, at a personal level, what excites me most about AI is that it is grounded in the real and the physical economy. The success of the sector isn't just a matter of smart people sitting in front of a computer screen and coding. It depends on those who work with their hands, even as robotics will change our factories. It will certainly make our healthcare providers better at treating diseases, but it will also depend on the data produced by those healthcare providers, by those doctors and nurses.
J.D. Vance, the speech he's giving to the AI Action Summit in Paris, the Vice President of the United States, of course. Bloomberg's Tom McKenzie is on the ground there, and we can go right to one of our top stories. He's talking to Sam Altman. Tom.
Anna, thank you very much indeed. Yes, the CEO, of course, and co-founder of OpenAI, joining me right now at the Paris Action AI Summit, Sam Altman. Sam, of course, the headlines right now, Elon Musk making a bid for OpenAI. Your response, you're turning him down for $97 billion.
I mean, look, OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things for a long time. This is this week's episode.
You take it seriously at all? What do you think he's trying to drive at with this?
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and he's raised a lot of money for XAI, and they're trying to compete with us from a technological perspective, from getting the product into the market. And I wish he would just compete by building a better product, but I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff. Now this. And we'll try to just put our head down and keep working. Does it make it more difficult to move from that non-profit model to that for-profit model for OpenAI? We're not moving to a for-profit model. We're not sure we're going to do it all, but no matter what, the non-profit will continue to be extremely important. It will drive the mission. It will continue to exist. The board is looking at lots of options about how to best structure for this next phase, but the non-profit is not changing into anything or going anywhere. Okay. What is your main mission here at the Paris AI Action Summit? You got Stargate. There's question marks about how much you're actually going to commit to that. Maybe you can give us some numbers on that, Sam. What is the messaging here from you and the team? So I've been to an earlier version of this at Bletchley Park, and that one was more focused on safety. This one, people are still talking about safety, but really I think people are now saying, okay, this technology is here. It's having an incredible impact. We've got to drive it. There is a lot of questions about how people can, maybe the most common question I've gotten is, can you do a Stargate in my country? We need infrastructure here. We want to do this. Can you help? So that's been a common one. But a lot of other things about just how are we going to deploy this technology to make sure people benefit? Where's it going to go? In what ways is the model going to improve? last week we launched this thing called Deep Research. There's been a ton of questions about that. How can we use this to really drive economic growth? But yeah, maybe economic growth has been the single biggest theme here.
And have you had clarity on DeepSeek? I know you and the team have been looking into that, whether they distilled, whether they inappropriately used your inferencing data. Have you had more clarity on
whether
that?
They did or didn't,
they a challenge,
they
a threat?
Built a good model. Many people will distill from many other models. Again, I feel so confident about our research roadmap and also our product roadmap that DeepSeek will do whatever DeepSeek's going to do. Other people do whatever they're going to do, and we're just going to try to build the best technology we can and get it into people's hands. And I think that's mostly going pretty well.
Do you think Musk's approach then is from a position of insecurity about XAI?
Probably his whole life is from a position of insecurity. I feel for the guy.
You feel for him?
I do, actually. I don't think he's a happy person. I do feel for him.
Okay. Do you worry that he has this proximity to the president and he can influence the decision-making of the US presidency and policies around this agenda on AI?
Not particularly. Maybe I should, but not particularly. I try to just wake up and think about how we're going to make our technology better.
Okay. Sam Altman.
Thank you.
Thank you so much. CEO, co-founder, of course, of OpenAI. We appreciate your time. Anna, back to you.
Tom, thank you very much. Tom Mackenzie there at the AI Action Summit with the OpenAI CEO, Sam Altman. Incredible lines coming out of that. Obviously, we knew that he was turning down the approach from Elon Musk, but really good to get some more detail there. Now, let's pivot to some other earnings stories. Caring shares gaining today with investors encouraged by better than expected profit and signs of stabilization at Gucci. The company's biggest brand has struggled in recent years from a sharp downturn in demand. For more, let's talk to Bloomberg Opinion's Andrea Felstead, who's with us now. Andrea, so the stock's up 2.7% this morning. What did we learn?
Well, everyone thinks that Gucci's stabilising. I'm not quite sure. The final quarter didn't see any improvement in Gucci. It was down 24% versus 25% in the third quarter. Most other brands have seen a genuine improvement, so that's a bit worrying. They've just parted companies with the designer Sabato De Sarno. They're now talking about a new designer who's going to inject more fashionability and desirability into the brand, but they want to build on the elegant base. Well, that hasn't really worked so far. So I'm a little bit sceptical and a bit puzzled why the shares are up.
Right. We're waiting for another designer, aren't we?
Exactly.
And that's the next thing, Andrea.
Exactly. And the rumours, the speculation is focusing on Hedi Slimane, who was at Celine, which he did a very good job at Celine. He did a good job at Saint Laurent. But he's got a very particular look, sort of streamlined, slim silhouette.
Yeah.
Whether that works with Gucci, I'm not sure. I think if he joined, it would be going back very much of the sort of Tom Fordy era at Gucci, the sort of sleek, sexy silhouette, rather than the maximalism, big logos that won them fans more recently.
Okay, the big logos are back. Andrea, thank you very much. Andrea Felstead from Bloomberg Opinion with the latest on that sector in focus. It's been a busy show this morning. We're going to go back to Paris. The US Vice President J.D. Vance is still speaking at the AI Action Summit in Paris, talking about America's plans for AI and what others can do in conjunction with the United States. Let's listen.
The Trump administration will guarantee American workers a seat at the table, and we're very proud of that. Now, I've taken up enough of your time, so I'd like to close with just a quick story. This is a beautiful country, President Macron, and I know that you're proud of it and should be. And yesterday, as I was touring Les Invalides with General Gravette with my 3 kids, he was kind enough to show me the sword that belonged to America's dearest international friend from our own revolution, of course, the Marquis de Lafayette. He let me hold the sword, but of course he made me put on the white gloves beforehand. And it got me thinking of this country, France, and of course of my own country, and of the beautiful civilization that we have built together with weapons like that saber. Weapons that are dangerous in the wrong hands.
how do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670-odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport. It's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with. Right? So all of a sudden, we're seeing these data points coming out going, my gosh, why haven't, we're owning this space.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Europe fights back. The EU says it will respond to any U.S. tariffs as President Trump orders meta levies with no exemptions or exceptions. No thank you. Sam Altman declines Elon Musk's offer to buy OpenAI for $97 billion. We'll bring you that conversation. And Fed Chair Powell heads to Capitol Hill for day one of his policy testimony. Good morning, Manus.
Danny, good morning. Just look at these equity markets. We are really counting down to Powell's congressional testimony. Stocks are lower. So 25% on aluminum, I should say, and steel is light. The question is, it's an open-ended risk now. It could be higher and it could be wider, and we expect broader tariffs to come. Barclays make a point. You want to short U.S. exceptionalism temporarily, and you want to go for the high value in the European trade. It's a winter rental trade. Roll it over, have a look at the bond market. What will Powell say? How will he explain the sticky and enduring inflation? You just look at the 5-year break-evens. They're ticking higher. So short-term inflation expectations are rising, Danny, relative to the longer term. But wow, what a conversation with Sam Altman.
Yeah, I'm really looking forward to catching up with Tom McKenzie in the next 30 minutes or so on his conversation with the OpenAI founder. In the meantime, Manus, we do have some stocks they were watching this morning. Unicredit, that is lower in the Italian trade, 2.8%. It pledged to return more money over the coming years, but that did not impress investors.
Supermicro also on the move, down after it snaps its rallying streak of 50% in just 5 days.
And Meta, we're keeping an eye on that one. It's leading losses for the so-called Mag 7. It is on track, though. If it does decline today, it would snap a record-setting 16 consecutive sessions of trading higher.
Klaxon there. In just a few moments, we're going to talk to Seema Shah of Principal Asset Management. Later this hour, Keith Lerner of Truist joins us on the stock markets. Trade tensions, they are escalating. As we've just said, President Trump ordered a 25% tariff on steel and aluminum imports. Now, the levies hit some of the closest countries and their allies, and the president warned that the rate may go higher. The European Union has felt the threat of Trump tariffs, and it has said it will respond. Here's what the EU's trade commissioner had to say.
We will
always protect our interests from unjustified measures in line with our values. And this time has come, and we are currently assessing the scope of the measures announced overnight and will be responding in firm and a proportionate way by countermeasures. We will act to safeguard our economic interests. We will protect our workers, businesses and consumers.
Oliver Cook is in Berlin. Ollie, good to see you. So we're getting ready for the response. It's not 2018. That was $3 billion. What do we expect the first European response to be?
Yeah, man, as we get the sort of trade war washing up here on European shores, and as you heard from the sort of European Trade Commissioner, was echoed also by Ursula von der Leyen. I'll just read you a couple of lines of what she had to say this morning, basically calling the tariffs unjustified and that the EU, that they will not go unanswered. They will trigger firm and proportionate countermeasures. The EU will act to safeguard its economic interests, protect workers, business, and consumers. Again, this is a sort of measured response in terms of the wording of this. Again, I think that everyone in Europe from Brussels to Berlin has seen what has happened with Canada, with Mexico, is hoping that there is going to be a negotiable outcome here. Remember, these do not kick in until March the 12th. But remember, what happened last time, Menace, is the countermeasures were on sort of Levi jeans, bourbon, Harley Davidsons, that sort of thing. So we expect something of the same sort of playbook. But at the end of the day, the chip on the table here is that trade surplus that the EU runs with the United States that Donald Trump is very unhappy with. That is a trade surplus of almost $250 billion, $230 billion. And that is what he's aiming to close. I think the other big question for the Europeans is how much of this is going to spill outside of the world of trade. It's not just about buying more LNG and fossil fuels by the Europeans. Could this be a trip that is used to sort of deal with antitrust regulations, to get the Europeans to spend more on NATO defense, potentially on Greenland? These are all the sort of major questions that are going to be serious questions for European leaders. The only good news we've got here out of this, Manus, is the fact that for the very first time, you have the high-level meeting of a U.S. delegation with the Europeans. We have Marco Rubio, we have J.D. Vance, we have Keith Kellogg, the special envoy for Ukraine and Russia, all heading to Germany at the end of this week to have really their first high-level meetings with the Europeans, who are really going to try to sort of pick their brains to understand exactly what Donald Trump wants and what they're willing to compromise on.
Right, and Donald Trump said in a statement, no exemptions, but he is considering an exemption for Australia. The Prime Minister of Australia is saying so overnight. So there is a room for negotiations. What is at stake for Europe as they try to do that, as they come up ahead of this March 12th deadline? What would be the most impacted?
Yeah, so listen, I mean, at the end of the day, the most impacted is going to be Germany. I mean, Germany had a record trade surplus last year with the United States. So we talk about a $250 billion trade surplus with the EU. About $75 billion of that is just from Germany. Germany is facing a third year of potential contraction. It is also facing a situation in which it's trying to de-risk from China. So Germany is really number one in the crosshairs here. It's going to be a major issue. Of course, the election is coming in 2 weeks. That may bring a new chancellor, a more conservative chancellor. They are hoping that that could build on a relationship with Donald Trump. But at the end of the day, really, the Europeans are sort of at the mercy of Donald Trump. And this is because they have built out their whole sort of economy, their whole premise on this liberal political and economic global order where free trade is sort of at the center of things. And that is something that now the Europeans are really very threatened by, not just by the United States, but also with China. And this comes back to home about all of the issues that the Europeans are dealing with their competitiveness proposals. And it's going to make everything all the more urgent for the Europeans here.
It's this great irony that perhaps a threat from the U.S. is the thing that brings Europe together. Oliver, thank you so much. Bloomberg's Oliver Crook in Berlin. Joining us now is Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, you and the team assuming that should all the tariffs go into effect, it would be more impactful than 2018. Before we get into the actual impact, is that the assumption that we need to be working with, that the threatened tariffs will indeed go into practice?
Hi, Danny. I think it's so difficult to say, and I think any money manager has to be really honest about this. Is we are dealing with a very, very uncertain environment. I don't think anyone really has a clear view into exactly how this is going to pan out. I think a couple of things that we can be a little bit more certain of is that there will be tariffs probably on China and Europe. There will be some kind of impact on their economies. And so if, as an investor, you have to start thinking, where do you want to have exposure to? For us, Europe really does sit at the crosshairs. And I think from a fundamental perspective, it really does have some challenges. Now, as you were saying, if this were to prompt Europe to come together, maybe prompt a more, better fiscal reform for Germany, that can change things. But there certainly needs to be something fundamental which changes for Europe when it's confronting this kind of threat.
Seema, good morning. When you hear J.D. Vance in Paris saying, we're going to build AI, we'll invite you on the journey. But when we talk about what Europe needs to do in the first instance here, it's not 2018. That's when it really was sort of slightly more tit for tat. $3 billion is what they went after. They have a window of opportunity. What do you think that they need to do to avoid the worst case scenario?
I don't think anyone can really know exactly what it is that they need to achieve here. You know, we talk about the surplus that they need to contend with. I think the tariffs which are being put back onto the US, they probably don't help the situation for the US-European relationship. You know, I think a lot of the growth has to come from Europe itself. There has to be some kind of almost move away from this reliance on industrial production, reliance on exports, and become a little bit more of a domestic-driven economy. So this is actually a really long-term focus for Europe, rather than something that can be just fixed this year by some kind of actions to tame some of the US concerns.
And yet, Seema, it's maybe counterintuitive then that a great trade to start the year would have been buying European stocks, buying Chinese stocks, buying Mexican stocks. All of those have outperformed the S&P 500 on dollar terms. Are you saying that that's not sustainable, that that's just a tactical valuation difference perhaps to start the year?
I think that's exactly what it is. And we saw a very similar movement last year, although last year there were some hopes that Europe could move into a more sustainable upward trajectory for the economy, and then that faded out very quickly. Coming into this year, investors were looking at the global valuation map, and they were recognizing that Europe, China looking fairly cheap. And so just a little bit of good news could prompt some upward movement. And we did see that initially, because the tariffs for Europe particularly weren't really announced. Of course, we've heard this from steel, but there wasn't anything specifically put onto Europe. And there was some good news around that, which prompted this upward movement for equities. Now, from here, we have to question, how much further can it really go? Is there going to be a sustainable improvement in the economy? And realistically, are tariffs going to come through, or at least is Europe going to avoid tariffs from the US? That seems quite unlikely at this stage.
Well, that was the Barclays winter rental trade. They wanted to be long Europe and short US exceptionalism as a short-term trade. So then tell us, what is it that perhaps could challenge US exceptionalism? Is it a break in yields to 5% with Laurie Calvasina here yesterday from RBC? And she's not dusting off her Burr book until that kind of provocation arrives.
I think that would be a key risk for the US, certainly. And what is driving that upward movement in bond yields? Is it concerns around inflation? In which case, maybe then the Fed has to start thinking about raising interest rates. That's what I think would be a key concern for the US. But we have to remember that when it's the US which is struggling, most of the world does struggle with them. So I think it's a very, very difficult set of circumstances for investors this year. And, as I've said, I think Europe in particular is really sitting in the crosshairs. It does make sense to have diversification, so not just in equities, but looking at fixed income, and more importantly, looking at real assets, because this year, I don't think the inflation threat is going to disappear. That's going to be a topic of conversation as we go through all the way to December. So it certainly makes sense for investors to have some kind of inflation mitigation within their portfolios.
If you're a bull, you need to look for comfort somewhere. Max Kettner of HSBC certainly is one, Seema. Just moments ago, he put out a new note saying that it's not tariffs, it's not AI that's the most important thing for this market and the reason to be bullish. It is liquidity and the fact that the most recent QRA showed unchanged U.S. Treasury auction sizes for some time to come. Does that give you any comfort, Seema?
So yes, so I want to be quite clear here. So I don't think we're not expecting a correction. Maybe, you could see a couple of days of down days, but we're not expecting a correction for the US. When we look at the outlook, we know that the US growth outlook is very solid. That should mean that earnings growth continues quite well. Now, are we going to see gains like we've seen in previous years, in the last 2 years? Probably not. This is more of a situation where you eke positive gains through the year kind of very, very slowly. And that liquidity, as Max said, that is very important. That is a key support for the market. But this is an uncertain time, and you're going to see this to be very volatile. And I think investors have to be important that they look away from the headlines, try and ignore the noise, and think about what is that fundamental. That fundamental is that US growth does look quite solid. There are risks on the horizon, but the baseline scenario is for continued modest positive gains.
Okay, well, we're counting down to Powell's testimony. Let's see what clarity he delivers to us over the next couple of days. Seema, thank you so much. Seema Shah of Principal Asset Management. Other stories trending on your Bloomberg terminal. This is what we got for you. BP pledged major changes at its upcoming strategy update after reporting a sharp drop in profit. The CEO said the company plans to fundamentally reset and not be business as usual. While most major oil companies posted lower earnings in the fourth quarter due to falling energy prices, BP is expected to reduce its share buybacks to bolster its weaker balance sheet.
Elliott Investment Management has built a more than $2.5 billion stake in Phillips 66. Sources say that the activist investor plans to push the company to sell or spin off its midstream business. Elliott first disclosed its stake in 2023. It has since named a new board member and sold assets as part of a cost-cutting initiative.
BYD added advanced driver assistance features across most of its lineup for no extra cost, sending the shares to a record. The move is seen as a competitive advantage over rivals like Tesla, which typically charge extra for some of the features. It also plans to integrate the software from DeepSeek without specifying how that would happen.
Coming up, Sam Altman declines Elon Musk's offer to buy OpenAI. His comments to Bloomberg coming up next.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Very impressive model, very impressive piece of work. I think the team is probably the best team that I've seen come out of China. So that said, I think a lot of the claims are exaggerated and a little bit misleading.
A lot of the key things from DeepSeek are reducing the cost of innovation, but also raising this question of data control.
If you have potentially more constrained resources, you can make a better job than if you have immense resources and stop thinking about what to do efficiently.
There is a global competition right now between whether the world's going to be built on small d, democratic AI rails, or authoritarian, autocratic AI rails, and that's the big takeaway from this.
I think there's been a lot of excitement, but we'll have to see if it materializes.
That was just some of the interviews from the AI Action Summit in Paris on the impact of DeepSeek and AI remaining front and center. Latest breaking news is, of course, a bid from Elon Musk to buy OpenAI for over $9 billion. The CEO, Sam Altman, posted this on X and spoke to us just a few moments ago. No, thank you. We will buy Twitter for $9.74 billion. I'm delighted to say we're at the Paris AI Summit with Tom McKenzie. Tom, great conversation with Sam Altman, and you went straight for the kill, which was on that potential deal. He doesn't have any interest in that at all. Frame it for us.
Manus, he shot that down very clearly. This is not a company that is for sale. He's still trying, Sam Altman told me, to work out exactly what Musk's ploy is here with this offer, with this bid of close to $100 billion for OpenAI. He said he wished there could be a place where they could actually cooperate and work together on the developments around artificial intelligence. Clearly, they are a long way from that. This is Elon Musk going with a gear change in terms of the approach, pretty aggressive approach he's taking to OpenAI. They are, of course, in a legal dispute as well, and now with the news today that he's made this bid. Again, Sam Altman shooting it down, saying this is not a company for sale, and saying that Musk's whole life, and I'm quoting, comes from a place of insecurity. So he, again, Sam Altman, characterizing this as a competitive challenge. XAI not catching up would be the characterization from Sam Altman with OpenAI, and therefore this is Elon Musk feeling insecure about the developments of AI from his own business. And I'm paraphrasing from Sam Altman here, but that seemed to be the message, that he thinks that ultimately Elon Musk is concerned that his AI business, XAI, is not yet up to speed with OpenAI. This is why he's making a bid. And he also said, look, it could slow things down in terms of the build-out of OpenAI, and particularly the progress around transforming from non-profit to profit, although Sam described it as slightly different to that characterization. But clearly, this is a business that's being reworked. He said maybe the ploy from Musk is to slow that down.
But Tom, this is why your line of questioning to Sam Altman was so good, because whether or not Elon Musk is insecure, you pushed him with this idea that has this proximity to power. And whether Sam Altman is concerned about that, he seems really sanguine, but should there be some concern, which, as you mentioned in your interview, they are pushing this AI venture?
Absolutely. And look, to some extent, they both have the ear of the president. He was standing there, of course, Sam Altman, a few weeks ago when they launched Stargate alongside President Trump. Up to $500 billion is the aim, is the ambition, with the initial $100 billion. So Sam Altman arguably has some input as well into the thinking of the president. Clearly not to the same degree as Elon Musk, who was there day in, day out, not just in Mar-a-Lago, but in the White House as well, with his own office and Doge, of which he oversees, of course. So there's a different power dynamic here. And as you say, Sam Altman seemed to be pretty sanguine about the ability for Trump or for Musk to change Trump's thinking and adjust policy that could be detrimental to OpenAI. And I think the Stargate project that Trump unveiled with great fanfare probably insulates Sam Altman and OpenAI, at least for now. But of course, they'll have to come up with the cash and make sure they can build out those data centers that are part of that plan. They've got one in the works in Texas. They're looking at 15 additional data centers across the US.
Tom, thank you so much. That is Bloomberg's Tom McKenzie. And later in the hour, we're going to bring you more of that interview that Tom did with Sam Altman here on Your Brief.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together. And that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
You're spoken, sorry.
My voice and my conversation, my poetry, you know.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games.
And
I wish I had
hogs.
kept it. I wish I would buy a Harley today if I had.
Yeah, but you
probably
wouldn't be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that
I'd
is.
be my feet in the sand and a beer in my hand.
Don't miss the next Open Interest.
It's your Bloomberg Brief with Danny Berger and Manish Kramny here in New York. Let's get you some front page news. A look at what's making headlines around the world. First up on the FT, reporting that President Trump is warning all Israeli hostages must be freed by this weekend. He said Israel should call off its ceasefire with Hamas if the hostages are not returned. This came hours after Hamas announced it was indefinitely postponing the next release of Israeli hostages that was set to happen on Saturday.
Next up, the New York Times leads with the DOJ telling prosecutors drop the charges against the New York City Mayor Eric Adams. And of course, Adams has been accused of accepting illegal campaign donations and a bribery conspiracy involving Turkish citizens. And at least one Turkish official, he has pleaded not guilty to the charges.
And on Bloomberg, shares of Kering rising less than 1%, but still higher. Some signs of stabilization at Gucci. They've had a lot of cost control measures that help the company generate annual profit that slightly beat analyst estimates. Also, a slight improvement in sales between the third and fourth quarter in China and the U.S. That last bit's going to be the good news, Manis, but most of this coming from cost cuts. They still don't have a lead designer at Gucci. They fired the one that they had previously and haven't replaced them yet.
Yeah, it depends whether they go for somebody that's into a slightly sleeker look. Andrea Felstead was on a little bit earlier from Bloomberg Opinion. There's a wonderful line. One of the big analysts who looks after this, Luca Stolka over at Bernstein, this was an annus horribilis for Kering, to say the least. And the CEO went on the tape. He talked about, we're not going to produce goods in America, so there's a risk, of course, of tariffs. We don't know whether it'll encroach into clothing or not. But, you know, the CEO, added tax burden is certainly going to hit competition, but we're not prepared to produce in the United States of America to potential tariff risk.
There, again, though, are signs that maybe the consumer is going to get a little bit stronger in China, maybe in the U.S. It's interesting, though, this two-track economy, the upper echelon seems to be recovering or not be hurt as bad. We heard from McDonald's yesterday. The low-income consumer in the U.S. is still really struggling. McDonald's earnings taking a big hit specifically because of that people were spending less there.
Also, in these luxury stories, there is that aspirational luxury versus the high end. And I think the question is, if we go into any kind of a slowdown here, and as you say, at home in Europe, or indeed in China, that's perhaps a bigger risk. We're going to talk more about those trade tensions. Percolating through markets, restrained for right now. Keith Lerner joins Danny and I in just a moment.
to succeed in Wall Street, what skills do you need? You need to be somebody that claws people on the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency. The other penny was lower G&A, blah, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger alongside Manish Cranny here. Let's set your agenda.
Europe fights back. The EU says it will respond to any U.S. tariffs as President Trump orders metal levies with no exceptions or exemptions. No thank you. Sam Altman declines Elon Musk's offer to buy OpenAI for $97 billion. And the Fed Chair Powell heads to Capitol Hill for day one of his monetary policy testimony. Danny, good morning.
Good morning, Manis. And even with all that, we have moved back within 1% away of all-time highs with yesterday's gain. Does today change that? We are taking some of the heat out of this equity index. Futures down about 0.33% for the S&P. More so when it comes to the NASDAQ 100, down 0.4%. The bond market, that has been relatively muted, though we are back above 4.5% for your 2-year yields. We're higher by 2%. $125 billion in coupon supply this week that starts today. Gold also easing, Manis. It had hit an all-time record yesterday. We are still above $2,900.
Well, Danny, the big debate is, first of all, we're going to have the conversation from Sam Altman from the AI summit in Paris. But it's what does Europe do relative to 2018. 2018, Europe slapped tariffs on $3 billion worth of goods. Levi Strauss jeans, Harley Davidsons. This feels like a very, very different environment because the leaders gathered in Paris in front of J.D. Vance at the moment.
Perhaps there is a window here, and this is why the market isn't reacting as much, to come to an agreement, to get an exemption. Trump literally said no exemptions when he issued these tariffs, but then moments later he was speaking with Australians saying that he would consider an exemption for them. These don't go into impact until March 12th. So there is at least time for leaders to speak with Trump and again, try to get some sort of deal done.
You can be pretty sure that the whole auto industry in Europe is on tenterhooks because that's where the real grievance is. US autos into Europe, 10%. European autos into the United States of America, 2.5%. That's what you call mind the gap. Let's kick on with our main story. It is around these trade tensions. President Trump ordering 25% tariff, Danny, as you just said, on steel and aluminum imports. The levies hit countries closest, their allies. President warned that the rate may go higher. The European Union has felt that threat of Trump's tariffs and has said it will respond. Let's listen to the EU Commissioner just on that note.
We will always protect our interests from unjustified measures in line with our values. And this time has come, and we are currently assessing the scope of the measures announced overnight and will be responding in firm and proportionate way by countermeasures. We will act to safeguard our economic interests. We will protect our workers, businesses, and consumers.
Keith Lerner, co-CIO and Chief Market Strategist over at Truist, joins Danny and I now. Keith, Danny just made that point. We're 1% away from all-time highs on these U.S. equity markets. There's a certain sense of stoicism, but this feels very different to 2018. Why the stoicism, and will it hold?
Well, good morning. I mean, there's so much news happening day to day. I think it's hard to keep up with. So why has the market been resilient? I think what you're seeing is a more balanced market in the U.S. where you have 10 of 11 sectors up this year. So I think what you're seeing from investors is money's just rotating along with some of this news, but it's not leaving the overall market because at the end of the day, corporate America has been very resilient. We've gone through, a once-in-a-generation pandemic, the highest inflation, and what have we seen? We've seen profit trends continue to move up. So I think in some ways, investors are giving, corporations the benefit of the doubt because they've been battle tested. And then overseas as well, look at these markets that have had, tariff announcements, Canada, Mexico, China. Look at the lows, they're all up, 5, 7. China's up about 17% off the lows as well. So I think they knew the tariffs were coming. I still think there's going to be some disruptions, right? Our outlook was a bull in a China shop this year. But I think, so far, I think we're going to continue to see more of this churn.
It is remarkable to see those international markets outperform the S&P 500 to start the year, Keith. There are some pockets of concern. I mentioned gold at an all-time record, break-evens, 2-year inflation swaps. Those are at the highest in nearly 2 years with some inflationary concerns coming in. At what point did the stress in those pockets spill out to the broader market? Is there a mechanism for that to happen, or are these just hedges doing what they're supposed to do?
I think in some way they are hedges. I mean, we've been bullish on gold for some time. I mean, there's a lot of different things outside as far as central bank buying, especially as some of our frenemies decide they want to, diversify beyond the U.S. dollar, as an example. I think as you're looking at this, as far as market indicators, inflation spreads are important, but also the 10-year Treasury has been pretty stable. I think when you start to get more concerned is when you start to see that 10-year Treasury become somewhat unhinged. I think Secretary U.S. Treasury Bessent mentioned, a focus on the U.S. Treasury. I think that actually calmed markets down, so to speak. And then oil prices. A lot of times when you have this geopolitical uncertainty, it manifests itself through oil prices. And oil prices have moved up off the lows, but relative to where we were a year ago, it's around the same prices. So again, I think those are the things we're looking at. Credit spreads, are we starting to see stress there? We're not seeing that. I still think that this year that we are going to have disruptions, right? Part of our outlook was you were going to see some things broken. I think the primary market trend is still positive. You got to give it the benefit of the doubt. There will be some disruptions because some of these tariffs will go into effect just because you need to in order to show you're serious. But at the end of the day, I still think at this point, our base case is that the economy will continue to be able to push through this.
Keith, we spent a lot of time last year talking to various guests about the barbell, cash on one side and uber tech or mega tech on the right-hand side. You talk about money rotating within the system. Does it rotate to defense? And if so, what is your key defense within that equity complex?
Yeah, I mean, within equities, I mean, we're still focused on communications. Tech's underperformed so far this year, but we still think it's too early to give up on tech, given the main dominant theme is still AI. And we also are overweight financials as well. As far as more defensive side, I think, we're staying with, larger cap. We do have that gold position that we mentioned as well. We're on the way to international. I just want to bring up a point. I mean, one thing we wrote in our outlook coming into this year, what we're seeing so far in international markets is very similar to what happened after 2016, right? There was all the concern when Trump came into office. Those markets bottomed in December, January, and rallied for a few months before rolling over. And we came into this year with those markets around 20-year lows on relative valuation. So I think what you're seeing in EFI, the EFI index was up less than 5% last year. So I think you're seeing this kind of mean reversion. There was some bad news priced in, and you're seeing some rotation. That trade likely has further to go, but I think, later this year, I think money will rotate back into the U.S.
Keith, can you invest in autos? Can you invest in that sector with China's 10% tariffs for large vehicles going into impact today with all the concerns of supply chains and needing to reroute from places like Canada and Mexico?
Yeah, I don't know. I'm not an expert on the auto sector, but I will just say this. I mean, it's, investing, as we all know, is all about expectations. And going back to China as an example, China's up 17% off the lows. And why is that? Well, the tariffs came in, but so far they've been 10% relative to expectations of 60%, and the market has actually responded favorably. So again, I'm not an expert on the auto sector per se, but I think, on one side, there's also probably a lot of bad news that's priced into some of these areas, and within there's probably some opportunities, but again, that's something that I follow very closely.
Keith, you've mentioned gold a couple of times. What do you think the gold market is telling us? We know that in part, it's driven by central bank buying. A lot of people are talking about various motives to sort of de-escalate or detach themselves slightly from the U.S. system. Do you think that has any veracity, or you think it's more an inflation story on the gold hype?
I think it's something that just is somewhat less correlated, right? If you think about the U.S. stock market and bond yields, they've been pretty correlated, right? As yields move up in the 10-year Treasury, then stock market has sold off, right? So it's kind of like what acts somewhat different, and I think part of that is gold. And then the reason behind, yes, central bank buying is large. I think it is an inflation hedge. It's also an inflation hedge against a potential weaker dollar as well. So I think there's several different things that are going on. And the other thing to think about with gold, it had a big move earlier, coming out of the early 2000s, but it hasn't done much since 2013. So yes, we've moved up a lot over the last year, but on a relative basis, it's trailed by a huge amount over the last decade. So I think there's just kind of renewed interest of something that acts different relative to the traditional asset classes.
It's a little bit weaker this morning, still above 2,900. Keith, it's always such a pleasure to have you on our show. Please come join us whenever. Keith Lerner of Truist. Coming up, President Trump says that he spoke with President Xi as China enacts their 10% retaliatory tariffs today. We're going to have more on that next.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
I happen to like him a lot, President Xi. Yes. I love talking to him.
Since the inauguration?
Yeah, and I've talked to him. And I talk to his people, too. His people come in all the time. We have a very good personal relationship.
President Trump there in a Fox News interview that was released yesterday. Trade jitters continuing to stoke caution in markets. Joining us now is Bloomberg's Mike Shepard in Washington. Trump talking about speaking with President Xi at a time when the two countries are really feeling the tensions of trade, of more steel and aluminum tariffs, of China putting on their 10% tariffs, targeting larger vehicles. What might they have spoken about? What might have been discussed? Do we have any details at all?
Well, Danny, it's a great question, and unfortunately, we don't know too much more beyond what the president told Brett Baer in this pre-taped interview. We don't know when this conversation with Xi Jinping would have taken place after the inauguration, and timing is everything, as you hinted at. Was it since the imposition of new U.S. tariffs on Chinese imports into the U.S., this 10% levy that we're seeing on new goods coming in from the world's second largest economy? That would certainly be one thing for the two men to be talking about, but there's so much more. There's also tensions over advanced technology, including this competition between the U.S. and China for dominance in AI, and we saw how the emergence of DeepSeek really changed that equation. We heard from U.S. Vice President J.D. Vance talking about it today and about this competition and the possibility of U.S. restrictions on China's access to some of the most sophisticated chips in this area. And that, too, can engender some sort of retaliation. So the two men really have a lot to talk about. And we've got these questions into the White House. We haven't gotten any detail yet. And it will be interesting to see how this engagement unfolds, because there is more to come. The U.S. is conducting a review of the Phase 1 trade deal that Trump enacted in 2020. And that could set the stage for even more tariffs against Chinese goods later this year.
Ushab, we have live prospect of 25% on aluminum and on steel. Europe has responded. Of course, this is ground zero for the likes of Germany on their steel industry. They're saying it's unjustified. They have a trade surplus of $250 billion. But this is just the first step in the grievance list from the White House on Europe. And really, it's a question of how much further do we ratchet up on the auto industry and further from Washington, isn't it?
It really is, Manus, and we are seeing hints from Donald Trump already with this threat of reciprocal tariffs. That is a very thinly veiled threat against Europe, and in particular, what he sees as a disadvantage for the U.S. when it comes to autos, where he sees U.S. exports to Europe, U.S. auto exports of cars and parts, as being treated unfairly in his view, that he sees that the duties being charged by Europe are way too high, and he wants to, in his view, even that out, and using tariffs as the primary weapon to do so. So this reciprocal tariff program, he talked about it last week, and he is saying that we will hear more about it later this week. He reiterated that on the Air Force One as he was heading to the Super Bowl, that reciprocal tariffs will be the next step. But the European Union is also preparing to respond, and we heard Ursula von der Leyen talk about that today and say that the EU is ready with its own response. And we have seen this movie before in 2018 when the U.S. imposed, during Trump's first term, tariffs on steel and aluminum. The EU responded, and that hit iconic American products like Levi Strauss jeans, Kentucky bourbon, and yes, even Harley Davidson motorcycles. So this will be just the first step. And as you and Danny were talking about earlier, there could be room for negotiation, a way to step back from this. And we have seen Trump do some of this negotiating with Canada and Mexico, but we have yet to see that really unfold to the same degree with the EU and China. So we're waiting to see how Trump and his team are engaging with those trading partners.
Shep, thank you very much. Yeah, 4 weeks in and day-by-day blows. Thank you very much, Mike Shepard there in Washington. Let's head back to Paris. Sam Altman has declined Elon Musk's $9.7 billion for OpenAI. Bloomberg's Tom McKenzie caught up with him a little bit earlier at the AI Action Summit.
Look, OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things for a long time. This is this week's episode.
You take it seriously at all? What do you think he's trying to drive at with this?
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and he's raised a lot of money for XAI, and they're trying to compete with us from a technological perspective, from getting the product into the market. And I wish he would just compete by building a better product, but I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff. Now this, and we'll try to just put our head down and keep working.
Does it make it more difficult to move from that non-profit model to that for-profit model for OpenAI?
We're not moving to a for-profit model. We're not sure we're going to do it all, but no matter what, the nonprofit will continue to be extremely important. It will drive the mission. It will continue to exist. The board is looking at lots of options about how to best structure for this next phase, but the nonprofit is not changing in anything or going anywhere. I mean, whether they did or didn't, they built a good model. Many people will distill from many other models. Again, I feel so confident about our research roadmap and also our product roadmap that, DeepSeek will do whatever DeepSeek's going to do. Other people do whatever they're going to do. And we're just going to try to, build the best technology we can and get it into people's hands. And I think that's mostly going pretty well.
Do you think Musk's approach, then, is from a position of insecurity about XAI?
Probably his whole life is from a position of insecurity. I feel for the guy.
You feel for him?
I do, actually. I don't think he's a happy person. I do feel for him.
Okay. Do you worry that he has this proximity to the president and he can influence the decision-making of the U.S. presidency and policies around this agenda on AI?
Not particularly. Maybe I should, but not particularly. I mean, I try to just wake up and think about how we're going to make our technology better.
Tom McKenzie, I'm pleased to say, is back with us. Tom, great conversation. In a short space of time, you covered a lot of ground. The inner workings of Sam Altman's take on Elon Musk's mind. His whole life is insecurity. But to a broader point here, Tom, this was a very measured, calibrated response to this surrealist kind of offer of $100 billion for AI, OpenAI.
Yeah, and the surrealist nature of it, I like the way you frame it, Manis, because that's kind of the expression that Sam Altman had written all over his face when he sat down with us. Is he was kind of befuddled by this bid. It's very clear the company is not for sale. The way he characterized it, as you heard, is that he thinks this is just the latest salvo, essentially, fired across their bows by Elon Musk, who, of course, has been in a long-running dispute with OpenAI about the way they approach the build-out of this crucial technology. And here, look, this is what Elon Musk would say. He would say that OpenAI and Sam Altman have veered away from that focus on being an open-source, non-profit, with a focus on safety. They are, objectively, not open source. They're a closed source. But Sam and the team at OpenAI would say, we are focused on safety, and we're focused on delivering products in a safe way to our users around the world. But this competition between Elon Musk and Sam Altman is a reminder that there is an arms race right now between these companies, but also at a country level, at a nation-state level as well. And that's what we're hearing on the ground here at the Paris AI Action Summit. And to some extent, the debate between and the spat between Musk and Sam Altman distills that very point.
You also got into DeepSeek slightly. We heard it in the clip there of your interview. And again, it's a very relaxed Sam Altman who doesn't seem to care. Maybe he needs to seem that way. But Tom, you've been speaking with not just Sam Altman, but leaders in AI in general at this summit. What is the competition they feel? Is there a real threat from the technology coming out of China?
It has been a key topic of conversation, undoubtedly, amongst executives, but also lawmakers. We've heard Ursula von der Leyen of the European Commission walking just behind us a couple of minutes ago, J.D. Vance, the Vice President, here as well. And amongst executives, certainly the ones I've been speaking to say DeepSeek is one of the key topics on their mind because precisely it is a reminder, a wake-up call that China is a serious competitive challenger. Some of the executives I've spoken to have said, look, in terms of the open sourcing model that DeepSeek has pushed through, that's really positive. It underscores that for them, open source is the way to go. Companies like Mistral here in France, for example, saying this is great news. Demis Hassabis, though, of Google DeepMind, saying, look, we've had a look at this, and we think that actually DeepSeek have exaggerated and are a little bit misleading in terms of their claims that they were able to produce a model with these capabilities at such a low cost point. Demis Hassabis saying they really haven't accounted for all of the training that went into it. So he's skeptical. Others are saying it reinforces the need to shift from closed model to open model. That is certainly part of the debate here as well. But to your point, it's a reminder that sovereignty is a key issue that lawmakers and AI executives are all grappling with amidst this arms race on AI.
Tom, again, a really fantastic conversation with OpenAI's Sam Altman. We appreciate you joining us. Bloomberg's Tom McKenzie there in Paris at the AI Summit. Coming up, more earnings and Chair Powell's testimony. That's all coming in your day ahead. This is your brief.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manish Krani here in New York. Let's get you set up for your trading day. We're going to get more earnings. Marriott, Coca-Cola both report before the opening bell. Then Fed Chair Powell will be testifying before the Senate Banking Committee. That kicks off at 10 a.m. Eastern. And then we're going to have $58 billion of their Treasury notes. That goes on auction later today. Manis.
Danny, it is all about Jay Powell and that testimony. 2 days of it. What is he going to intimate in terms of caution, desire to hold? They've got the cover from that solid jobs report that we had on Friday in terms of the wages and in terms of the unemployment rate of 4%, wages plus 0.5%. But I got to hand it to Kid Jukes. Can cool-handed Jay let us forget about tariffs for a while? I don't think anybody is going to put tariffs at the back of their mind. Certainly not in Europe this morning. They're all sitting like ducks in a row in front of J.D. Vance.
Well, the threat is that he goes to testify in front of Capitol Hill and he gets questions about that. And I think there'll be many questions about the politicization of the Fed, that some number of Fed officials incorporated Trump's policy into the outlook. You know, that's going to be pressed onto them, especially when Trump has gone back and forth saying that he'll demand lower rates. But of course, after the last rate decision, he said it was the right move for them to hold rates.
Which takes us to Neil Dudder put a great note out yesterday. And he talked about, I'm paraphrasing here, about, you know, can the Fed really sit and hermetically seal themselves off from saying anything about tariffs? It's already there in some of the projections, but I'm sure that'll be part of the conversation on the surveillance team. From Danny and myself, Bloomberg Brief, I'll hand you over to surveillance.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, you know, with lots of supporters, a really mind-blowing level of innovation against emissions. And, you know, in the last 9 years, that's gone better than I would have expected. So only now could you even plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Ultimately, stocks have been a bit unsteady over the last couple of weeks, so volatility certainly is part of that discussion.
We are a little concerned that there might end up being some negative economic effect because of all this uncertainty.
The good news is that not only has the market been fairly resilient, but the breadth within the market has been quite impressive, too.
The U.S. is still front and center, so I think staying as domestic as possible is going to work.
We could see investors step back a little bit. That might give you an opportunistic time to come into the market, a time to really kind of step in to that weakness.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Tuesday, going into a big 24 hours. Your equity market looks like this. Here are the scores. Equity futures negative by 0.3% on the S&P. We're down by 0.5 on the NASDAQ 100. And your next 24 hours looks like this. Later on today, Chairman Powell going in front of the Senate Banking Committee. Then tomorrow in front of the House. And tomorrow morning, the big data point of the week, U.S. CPI just around a corner.
That seems to be what everybody's focusing on. Do you get a confirmation of this inflationary tilt upward that we're seeing in a lot of data that's been coming out? Although yesterday, the one-year New York Fed inflation expectation survey did not confirm you, Mish, just throwing that out there. Nonetheless, right now, the fear is possibly an overshoot of inflation, at least in the near term, especially with the looming tariffs.
And the outlook gets a little dicier because of the looming tariffs and the snapback from the Europeans. So here's the snapback. The president of the European Commission saying unjustified tariffs on the EU will not go unanswered. They will trigger firm and proportionate countermeasures.
Well, let's see. Trump yesterday came through on what he said he was going to do, which is 25% on steel and aluminum. Those will go into effect March 12th. Basically, what we're doing is Trump going back to the playbook we had in Trump 1.0, which was expanding on these steel and aluminum tariffs. Some of them were kept in place by Biden. What is interesting here is that exemptions. He says there's going to be no exemptions. That means you, the European Union. Potentially there's one that could get an exemption. That's going to be Australia. But why his North Star? The United States has a surplus when it comes to Australia.
I'm thinking about exemptions within the United States. So for domestic production, I understand the objective. We want to get it up for national security reasons and other reasons too. Understand all of that. I think we're all on the same page. This can really hurt downstream manufacturers. And the pushback from them over the next few weeks, I think, will be pretty loud and clear.
Yeah, even though foreign steel isn't a huge portion of overall steel consumption in the United States, it is disproportionately used in the aerospace industry, in the auto manufacturing industry, in the energy sectors. To your point, it is going to be some of those sectors at a time where there's already quite a bit of policy uncertainty. They're going to be going to the president and saying, you want a pro-growth policy? This ain't it.
So Chairman Powell's got set policy, right? He's got to come out in March and put out some new forecasts. What do you do? Mohammed Al-Erian's got a new column out today, and he quotes Anne-Marie directly. Uncertainty is a feature rather than a bug, and it's going to be a feature of monetary policy for the next few years, potentially.
Absolutely. 4 years, we're going to be living in uncertainty, because at the end of the day, and I spoke to a source of one of these countries that is targeted by these latest tariffs, and they said at the end of the day, we do think Trump wants a deal. But how difficult is it going to be for the Federal Reserve, for Chair Powell in front of the senators today, in front of representatives tomorrow, when economists are saying that tariff risks can potentially mean higher inflation and higher grocery bills and higher everyday products for American consumers.
Uncertainty isn't just something that's out there and is a whole host of feelings. Uncertainty affects how corporate executives plan their life, plan their company's strategy. When you take a look at this index of policy uncertainty that Nick Bloom, the Stanford economist, put out, it was cited in the Wall Street Journal. He says it's rising to levels that we haven't seen since the pandemic, and this will have a suppressive effect on a lot of the growth and a lot of the deal making. We're already seeing that on some level. That's really the potential consequence of a feature and not a bug.
Why does the start of this show often feel like the start of a therapy session with you? A bunch of feelings.
Hold on a second. But that's essentially what people are dealing with right now. And every note I read is what you should be paying attention to and what you shouldn't be paying attention to, because there is so much noise out there that it can be overwhelming and numbing. I'm just throwing that out there.
We'll spend this morning talking about your feelings. Equity futures on the S&P, negative by 1/3 of 1%. Coming up this hour, your 60 Minutes looks like this. Daniel Morris of BNP Paribas as investors digest the latest trade tensions. Ed Mills of Raymond James as Trump raises tariffs on aluminum and steel. And Leslie Falcone of UBS as Fed Chair Jay Powell heads to Capitol Hill. We begin this hour with equities inching lower after President Donald Trump ordered a 25% tariff on steel and aluminum imports. And Europe pledging to retaliate. Dan Morris of BNP Paribas writing, despite tariff tumult, strong earnings are supporting equity markets. Equity volatility is actually below average. We can head to Europe right now and catch up with Dan Morris. So Dan, the DAX so far this year is up about 10% year to date. What explains that, given some of the headwinds that could be on the horizon?
Well, I think you need to think about it short-term and medium-term. I think if we, in retrospect, try to analyze what happened, because honestly, I don't think too many people were overweight European equities at the beginning of the year. We did initially get slightly better macroeconomic data, things a bit better for the manufacturing PMIs. We also have seen positive earnings revisions coming out of European analysts. And also, we do have the earnings season results, which have been pretty good. Now, the interesting thing is they're still worse than in the U.S., but your expectations really were so low for Europe that you had a bit of positive news. I think we've seen an outsized reaction.
At this point, Dan, do you think that that trade can continue of outperformance in Europe?
Yeah, well, that clearly is the key question here. We're probably a bit skeptical now. To be honest, right now, we're neutral. In terms of regions and countries, appreciating that there is this chance for a bit of a catch-up for those countries that have lagged since the election. But medium term, it is really hard to make an argument that doesn't favor the U.S. We talk about the tariffs, we talk about all these other risks, but there are a lot of other, we think, positive things going on. Again, fundamentally, it is about earnings. We think that earnings growth is going to be stronger in the U.S. That really should matter. At the same time, that broadly, we don't think that valuations are too out of line.
Dan, how do you decide what's noise and what's signal when it comes to some of the policies that we keep getting out of Washington, D.C.?
Well, I think one way to go about it, particularly if we think about tariffs, is to try to understand the framework. What are the objectives? So on one hand, we know Trump has already used tariffs simply as a negotiating tactic to achieve some other objective. So the point isn't to have tariffs for their own sake, it's to achieve something. Now, if we look at steel and aluminum, that may be more about national security concerns. Even if it is, on one hand, negotiation, there is an argument that the administration might think, at least some tariffs might be worthwhile. So it's a question, I think, of trying to look at what is the real point here, and then, therefore, to assess what is the likelihood that they actually end up being imposed or if they just get negotiated away.
Daniel, this may sound counterintuitive, but at the end of the day, is Trump actually forcing Europe to do something Europe needs to do, which is act cohesively and together?
Well, the line here is that Europe only changes when there's a crisis. I don't know if people would actually want a crisis just for the sake of change in Europe, but nonetheless, it arguably would be a positive impulse, particularly if you think about deregulation. There is, I think, a view among business leaders on the continent that there is a lot of regulation in Europe, and particularly when you see this very significant deregulatory push in the U.S., the gap between the two regions becomes even greater, and that has an impact on growth. So there is a rethink. You do hear this from the European Commission about how Europe achieves its own growth objectives.
Well, not just deregulation, but Trump has another grievance when it comes to Europe, and of course that's defense spending. Do you think potentially that could be one of the negotiating tools? And if that's the case, would you want to buy into some of these European defense manufacturers now?
But this is something that clearly that Trump's talked about for a long time, so the question probably would be how much of that is already reflected in earnings expectations for this sector. But, absolutely, this is one of the things that President Trump has addressed, and you would imagine is going to be a part of those discussions.
Hey, Dan, appreciate it, sir. Thanks for your time. Dan Morris there, BNP Paribas, on the latest. Looking ahead to a busy day. Tomorrow morning, CPI, the big focus for us here at Bloomberg, and I'm sure for you at home and on trading floors around the world. CPI 8:30 Eastern Time tomorrow, and a double dose of Chairman Powell. Chairman Powell going in front of the Senate Banking Committee later on today. Neil Dutta of RenMag with this to say ahead of that. Growth is slowing while the Fed is playing a game of chicken with the Trump administration. That's quite a quote from Neil overnight.
He believes that there is a natural disinflationary force, and if you take a look at the labor market, if you take a look at the housing market in particular, you see real softness in the U.S. economy that is only exacerbated by the Fed holding rates at this level for a longer period of time. You can debate whether that's true. You can't debate the fact that the Fed right now seems to be on a path of cutting rates less often than people expected because of the tariffs and some of the potential inflationary policies.
And how much is this latest tariff on steel and aluminum, these latest levies, going to be a massive headache for the Fed? Goldman Sachs this morning and overnight when the news came out. This policy impacts the cost of importing aluminum into the U.S., largely passed through to U.S. prices. No direct impact on the LME prices trading in London.
These are threats. It's just a negotiation. I think people are still conditioned by the fact we avoided those tariffs on Mexico and Canada. These tariffs are happening. The 10% on China, it's on. It's happening. This tariff right here, it's going to be on. It's happening. It's going to be difficult to avoid.
Well, when we ask that question, are these negotiating tactics or are these some kind of goal in and of themselves? People say yes, right? But on one hand, you do have some that are negotiating tactics. On the other hand, some of them are goals in and of themselves to separate the U.S. industry. If you take a look at market expectations for inflation 2 years and 5 years out, they have climbed to the highest levels going back at least to early 2023. The market is responding. Whether or not it's true, they're taking a signal from this.
When you look at the U.S. biggest steel importers and aluminum importers, you can go line by line, country by country, and understand potentially if there's going to be carve-out or exceptions for certain countries, what Trump would want in response. So you can imagine all of these capitals, whether it's in Canada, in Bahrain, in India, in South Korea, are thinking, what can we do to acquiesce the president's concerns? And I bet they're doing that right now.
So there are pockets of problems for sure. They're going to bubble to the surface in the next few weeks, the next several months. I keep going back to the equity market, though. Banks are still providing leadership. Banks are still rallying over the last month or so. And if you were worried about the U.S. economy and problems emerging, that's not what I would expect to see in a financial sector.
It also would be strange to see such incredible growth in the earnings that we've seen, which have been pretty strong all around. If you take a look at the banks, they're being supported by the fact that volatility tends to lead to more trading, but also you're starting to finally see the deals. And we saw that yesterday, that a number of deals were being announced. So people who are worried that the first month of the year was really a signal of what was going to come, not maybe the case, given the fact that those deals are in the wings and are starting to move.
And banks are hoping we see a lot more of that, that's for sure. Equity futures this morning, a good morning to you. If you are just tuning in, down by about 1/3 on the S&P, with an update on stories elsewhere this morning. With your Bloomberg Brief, it's Danny Berger. Hey, Danny.
Hey, John, just to recap the details on tariffs, President Donald Trump ordering a 25% tariff on steel and aluminum imports. The tariffs will go into effect on March 12th and will also include finished metal products. Speaking from the Oval Office, Trump insisted the move helps boost domestic production and bring jobs to the U.S. Gold has hit another record high. It traded above $2,942 an ounce before paring its gains after President Trump announced those tariffs on metals. Both Citi and J.P. Morgan have a forecast of $3,000 for gold this year. A group of investors led by Elon Musk offered to buy the nonprofit that controls OpenAI for $97.4 billion. OpenAI CEO Sam Altman responded on Musk's X, saying no thank you. Speaking to Bloomberg earlier this morning, Altman fired the latest shot in the war of words between the two.
Probably his whole life is from a position of insecurity. I feel for the guy.
You feel for him?
I do, actually. I don't think he's like a happy person. I do feel for him.
There's been no response from Musk on that yet. And that's your brief, John.
Give it time. Give it time. Danny, thank you. More from Danny in about 30 minutes. Up next on the program, escalating trade tensions.
Essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States.
So in just a few moments, we'll catch up with Ed Mills of Raymond James. In a few minutes' time, we'll catch up with Ollie Crook out of Europe on the latest threat to snap back. This is Bloomberg.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a pretty calm start to this morning's trading. We're taking just a little bit back from yesterday's gains. We're down about 1/3 on the S&P 500. In the bond market, yields higher by 2 basis points, still in and around 450. This could all change in the next 24 hours. You'll hear from Chairman Powell a couple of times, and you'll get a big data point tomorrow morning at 8:30 Eastern Time when CPI drops. Your 10-year, 452. Under surveillance this morning, escalating trade tensions.
This is the beginning of making America rich again. We were being pummeled by both friend and foe alike. Essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States.
So here's the latest. President Trump announcing new tariffs and Europe snapping back. European Commission President Ursula von der Leyen saying unjustified tariffs on the EU will not go unanswered. They will trigger firm and proportionate countermeasures. Bloomberg's Ollie Crook joins us now from Berlin for more. So Ollie, what's the latest and what comes next?
Yeah, Jonathan, I think we should sort of linger on those words, firm but proportionate. I think the proportional part of that is going to be very sort of important because for the Europeans, at the end of the day, these tariffs don't kick in until March the 12th. I think they're still hoping to negotiate their way out of it. They watch very closely what happened with Canada, with what happened with Mexico. And of course, they do have their list of retaliatory measures. We remember last time Trump was in office, they talked about targeting, Harley Davidsons, bourbon, those sorts of things. But really, John, at the end of the day, that's really a drop in the bucket. What Trump is trying to address is the basically $250 billion surplus that the EU runs with the United States, about $230 billion last year. And at the end of the day, steel and aluminum really isn't the lion's share of it. I mean, it's going to hurt Germany the most, but Germany only sold about $3 billion worth of steel to the United States last year. It's the 7th biggest provider of steel to the United States. But again, this gets serious for the Europeans when it starts to target the auto sector, the pharmaceutical sector, the machinery sector. I think for the Europeans, at the end of the day, they know every single negotiation begins by naming a price. Donald Trump Trump has not quite named the price yet for the Europeans, what he wants from them. Yes, we know he wants them to buy more fossil fuels. Could it be about NATO spending? Could it be less antitrust action on U.S. tech companies? Could it be Greenland? They really don't know. The good thing that they have this week is the Munich Security Conference, where we're going to get the first high-level delegation from the Trump administration coming into Europe. You're going to have Marco Rubio, J.D. Vance, Keith Kellogg, the special emissary on Russia and Ukraine, and potentially also get the outline for the peace plan there.
And J.D. Vance is in Paris for the AI summit as well. Oliver, walk us through a little bit more of what potentially Europe really could do before March 12th to relieve the president's concerns.
So listen, I think that we're going to have to sketch that out, and that's where I'm going to be at the end of the week in Munich and trying to chase down, just the Senate delegations and everybody that's going to be there, including J.D. Vance and Marco Rubio, to basically see what they're trying to extract from the Europeans. Of course, the trade balance is going to be front and center. It's, again, almost $250 billion. What can the Europeans do? We know that the Europeans do need to buy more fossil fuel for their own energy security. We know that's an open door that they can push on that can make everybody sort of happy. There is also the question, though, on retaliation. We talk about goods all of the time. There is also the question of trade between services as well, between the United States and Europe. There is a massive surplus that the United States runs on services trade with Europe. Is that something that they could target? But at the end of the day, they don't really have the large bargaining chip when it comes to sort of trade. So we'll have to see what the sort of sketches of the contours of that negotiation begins to look like at the end of this week.
Ollie, appreciate it. It's good to hear from you. Ollie Crook there in Berlin. You'll hear a lot more from Ollie through the week on this trade effort as we sit here and wait for so-called reciprocal tariffs. And I think that's probably what the Europeans have got to do here. Sit here and wait, because this is one piece of a much bigger picture. Got to wait to see what the reciprocal tariffs will be, what the president's approach will be to that. Before you start talking about proportionate countermeasures, how proportionate do you need to be? How big is this effort going to be?
Are you going to make Italians buy American coffee? Are you going to make the French buy American steaks? Are you basically going to say, I want you all driving in Fords? At what point are you going to raise the stakes, no pun intended, at a time when it's visceral and there's a real grievance that goes beyond just what might seem to make the most sense for business?
What's wrong with American steaks?
What's wrong with Ford?
Actually, that's one of the issues.
What's wrong with Ford's, Bramo?
Well, but this is actually one of the issues.
I would love to see a Hummer in those tiny, Italian streets.
Back streets, yeah, I'm not sure that works. Ed Mills of Raymond James joins us now for more. Ed, let's continue the conversation we started with here. The big tariffs on steel and aluminum, and whether there will be any carve-outs. What's your base case on that one?
I think the base case is no. I think that the base case is that they go up from here, John. And I think you are 100% right saying that there's all these expectations out there that they're not coming. They're coming. And I think it's really instructive to look exactly what happened with the announcements on Canada, Mexico, and China. The Chinese tariffs are in. And then we move away from the kind of Mexico and Canada tariffs. And then we put on a tariff on what is the largest imports from Canada and Mexico on steel. And this was something the Biden administration was doing. One of the things that we're concerned about is the Mexico backdoor, the fact that a lot of Chinese steel goes to Mexico or Canada and then gets imported into the United States without a tariff. So my expectation is that this is happening and it only escalates from here.
So if this happens and these stick, 25% on aluminum and 25% on steel by March 12th, what are we supposed to expect when it comes to reciprocal tariffs that Trump says we're going to get in the next day or two?
I think that what we're going to see is that what you've seen the administration talk about is that what are the average tariffs? So on the UK, there's an average tariff of 4.5% for U.S. goods. We'll probably put that on the UK. For India, it's 18%. When I've talked to folks within the administration, when I've talked to folks who are the trade experts who worked for him previously, what they always tell me is that as long as the other country is willing to drop their tariffs to match our tariffs, then they don't go into effect. But that's a kind of a push here to make sure that what we get tariffed versus what they pay is exactly the same, Anne-Marie.
So, Ed, who do you think's lining up to try to drop their tariff first?
I don't know if we get that kind of immediately. It does seem like India is top of the list, kind of within the focus of the Trump administration. I am certainly looking to see if kind of Europe is willing to do this. I do think when I've talked to other strategists and other folks who are informing foreign governments, one of the big concerns that I hear from them is that maybe they offer up something and then Trump embarrasses them, which is absolutely part of the negotiating strategy. You look back to 2018, we put steel and aluminum tariffs on in the first Trump administration. Over the next couple of years, Trump worked out deals to remove those tariffs. Look at a deal with Australia. those now are kind of blown up. If a country makes a deal, can they actually see Trump follow through with this, or does he come on top and do something different, which makes it hard to want to be the first one that lines up and tries to do something to stop this?
Ed, the market has been pretty sanguine. Right now, stocks aren't really responding in a significant kind of way. Julian Emanuel of Evercore ISI said this will only actually encourage the president to go further and be more aggressive with tariffs. Do you agree?
That's what we saw in the first term, Lisa. We saw that, whenever he was aggressive and the market was okay with that, he doubled down, he tripled down. It was only when the market sold off 10 to 15% where we would get kind of a tweet out there or a statement that there was progress being made. That would be my expectation again. We've entered into a new Trump put on the market, which is let's look at what's going on within the bond market. If we see yields kind of on the long end of the curve really start to blow out, that would be a binding constraint from him. But certainly to the extent that there is not a negative reaction, he feels emboldened. And this is one of the problems with the market right now, is that they lived through Trump 1.0 and therefore have this expectation that if it gets bad, he reverses course. And so we're kind of stuck in this feedback loop of no one wants to be the first person to sell because there's going to be a reversal, and therefore people are kind of sticking with this a lot longer than they normally would. But that threat doesn't mean it's gone away.
So you think, Ed, that when people realize that these tariffs are for real, that there actually will be a whole host of pressure that maybe we're not seeing right now because people aren't taking things seriously. Is that right?
I think that is right, but I would layer in, let's see what else is happening. So in the first term, there was a massive push for deregulation, or that was one of the stories, and that didn't get realized. We've already seen this week a takeover of the CFPB. We have an aggressive action to try to shut that down. That's greater than any regulatory action that was taken in his first term, and we're already only in the first month. So if there is those deregulatory tailwinds, if the Trump tax cuts get made permanent, if they add to those Trump tax cuts, if the dollar remains strong, if exports kind of are rebounding because of these trade kind of restrictions, then the market can hold in there. But if it is tariffs and only tariffs, and we have inflationary pressures, and the 10-year blows out, the Fed is thinking about raising rates, that's when we have the negative market reaction.
Ed, appreciate your time, sir. It's good to see you. Ed Mills there of Raymond James. Chairman Powell going in front of the Senate Banking Committee a little bit later on. Clues in the name. I think we might get more questions on banking and regulation than we will, perhaps, on monetary policy.
Do you get a sense that they are for stripping out the CFPB and deregulating a banking sector that has been one of the priorities of his administration?
I'm going to guess there's one senator that's unhappy about that.
Well, let's see.
A senator from Massachusetts, maybe.
Whose name rhymes with Marin?
With something to say.
Yes, well, I'm sure
on that
that's
topic.
The case.
Up next on the program, don't miss this. Bloomberg's Tom McKenzie after sitting down with Sam Altman on Elon Musk. That's next.
you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Here's a quick snapshot of the equity picture so far this Tuesday morning. Good morning to you all. Equity futures declining by just 1/3 on the S&P. We're negative by 0.4 on the Nasdaq. We're down 0.5 on the Russell 2000. The small caps just a little bit softer. In the bond market, 2-year, 10-year, 30-year, expect plenty of action here in the next 24 hours or so. 452 on 10s, on 2s, 427.70. The data starts tomorrow morning. CPI, then on to PPI Thursday, then on to retail sales on Friday. Before we get there, got to talk about some bond supply, don't we? I can see you getting excited.
Yeah.
Is it 3s today, 10s tomorrow?
Yes, there are $58 billion of 3-year notes today at 1 p.m. There's $42 billion of 10-year notes on Wednesday, and there's $25 billion of 30-year bonds on Thursday. What's interesting is that these might not be interesting, and I know that that sounds tautological, but Max Kettner of HSBC said there's a lot of noise, ignore the politics, ignore DeepSeek, pay attention to the Treasury funding announcement that didn't shift the total size of the auctions, because that lack of supply will give some ballast to a market that still isn't fully positioned for an ongoing rally.
$42 billion of 10-year notes tomorrow. The one to watch, I think, particularly after the CPI print tomorrow morning. So that's the bond market picture. Here's the FX story. We've seen so much volatility in foreign exchange over the past few weeks or so off the back of the trade headlines. We've got more headlines for you. The euro in at around 103, 103.17 at the moment, positive by 0.1%. This is just getting started. I think we have to keep taking a step back here. This is week 4 for the Trump administration. He's put tariffs on steel and aluminum, telling us there will be no carve-outs. The Europeans are saying we'll get ready with countermeasures. This is only just getting started. We don't know what reciprocal tariffs look like. The president's been taking aim consistently at European autos. I'd like to see what's going to happen there in the next several weeks too.
Anne-Marie and Ollie were talking about how there's no off-ramp that we can see right now. And I think that's the main issue, is that people don't understand what the ask list is. So you can't really frame this as a negotiation or whether this is an end goal in and of itself, because we don't have an understanding of what the parameters are. And that, I think, will be more instructive.
The ask is, I want to sell more European autos, or rather US autos in the European auto market. I mean, that's the ask, isn't it? And you can't negotiate that away. That's not like the southern border issues or the northern border issues, if there are any, between Canada and Mexico, respectively.
They could potentially drop taxes. They could potentially drop tariffs. They could potentially run a Ford ad, every half hour on their local channel. I mean, there are things that they can do to really bolster.
On state TV?
Yeah, exactly.
Yeah, start running commercials at Ford and GM.
Exactly.
Okay. That's one idea. I'm not sure you can do that. On our radar this morning, President Donald Trump ordering a 25% tariff on steel and aluminum imports, set to take effect on March 12th. European Commission President Ursula von der Leyen responding, saying, quote, unjustified tariffs on the EU will not go unanswered. Elsewhere, Fed Chair Jay Powell heading to Capitol Hill for his semi-annual testimony. Powell appearing before the Senate Banking Committee today at 10 a.m. Eastern Time, followed by the House Financial Services Committee tomorrow. Mentioned this briefly about 5 minutes ago. Worth going back over. Typically, we go into this and we talk almost exclusively about what he might or might not say about monetary policy. Banking and banking regulation has got to be top of mind going into this one.
Especially after they neutered the CFPB, the Consumer Financial Bureau Protection. There has been a huge deregulatory push by this administration that's gone further than a lot of people ever expected and further than they went during the last Trump administration. Will this Fed chair support that? Will he agree and say, yes, to some degree, there had been an over-regulating of the financial sector? Will he push back and say, we're actually examining certain things? Senator Warren will definitely eviscerate him if he says anything, but particularly with respect to deregulating the financial sector.
Senator Scott, who's the chairman of the Senate Banking Committee, he's going to talk about Basel III endgame proposals. He's going to talk about strict, what they would call financial regulation to the Biden administration, and he's going to want to hear Powell say, yes, we're walking that back now. So when it comes to regulation, it's going to be from both sides, not just the bashing from Senator Warren, but also it's going to be tough coming from Republicans as well.
The banks are expecting things to happen. Bank stocks are. That's where the leadership has been in this equity market. That's been a favorite sector ever since Donald Trump won this election and Republicans took the House and Senate.
What happens if Fed Chair Jay Powell, I'm just thinking as you're speaking, pushes back and says, actually, we're not going to roll back the Basel III. And we do think that there is the need to increase some of the stringencies of these protocols. Could there be a pretty significant market reaction when usually these are pretty sleepy hearings? I mean, this could potentially be high drama.
We're building this up. That's the promo.
So.
All right, 10 a.m. Eastern Time, the Senate Banking Committee taking on Chairman Powell on Capitol Hill. Look out for that. Then round 2 tomorrow in front of the House Financial Service Committee. Looking forward to catching up with French Hill tomorrow, of course, the chair of that committee. So he'll be joining the program, I think, in the next 24 hours or so. Elsewhere, President Trump saying he's spoken with Chinese President Xi Jinping since his inauguration, without specifying when the conversation actually took place. The two previously spoke on January 17th when they discussed trade, TikTok, and fentanyl. Not the first time he's talked about speaking to a foreign leader without any real confirmation as to when this happened or if it indeed did happen.
That's right. This is happening now with Xi Jinping, and it's also happening with President Putin when you see his team obfuscate about when potentially this call would have taken place, why there's no readout, and then you go to the foreign government and you ask about it, and they're also slightly a little bit confused. Here's what Trump had to say, though, yesterday. His people come in all the time. I would love to know who are Xi Jinping's people that are coming in all the time. I was there at the White House last week. I didn't see, the ambassador to China walking in and out of the West Wing. And then he says we have a very good personal relationship. Then, reporters go to the Chinese Foreign Ministry, and the only thing they're pretty much talking about is when the two spoke before inauguration on January 17th. So it's quite unclear.
Did this happen in the previous Trump administration, or is this sort of a new playbook to try to seem as though they're acting in an expedient way on a multitude of fronts when it comes to, in particular, Russia and Ukraine, as well as what's going on with Israel?
I think it's that whole idea of uncertainty. Foreign leaders might pike up and say, what is he talking about? Were we supposed to have a call? What is he trying to get at this time? Also, I think he's trying to prove to the American people, look, I'm firing on all cylinders. I'm everywhere, doing everything all at once, trying to solve problems. The issue is, it would be good to have clarity on what kind of conversations are taking place. But to your question, Jonathan, you remember when I think he made up a call with Xi Jinping.
The phantom phone call, yes.
Yeah, that was it.
The phantom phone call. But it was important to remember the objective of the phantom phone call. The equity market was gapping lower. There was concerns about tensions between the United States and China. So the President of the United States came out and said this was a call between him and the Chinese leader. The Chinese never confirmed that call ever took place. But the signal we took away from that was something that ultimately the President worried and cared about what was happening in the equity market. Now, I don't know if you want to take away from this that he's trying to suggest that talks are ongoing, things are okay between us and the Chinese, as ultimately he ramps up the pressure with real action by putting extra tariffs on them.
Part of the issue is the real action and the anger seems to be directed not at China, which is the irony of this whole thing. It's directed at Canada and Mexico and Europe. And so you have to wonder where this call came from in terms of a messaging signal at a time where we're not worried about Xi Jinping in China. We're more worried about what Ursula von der Leyen, how she's going to feel about her auto sector. So it's a very different scenario to talk about.
Do you want to talk about feelings, real feelings? Let's get you some real drama, some tension.
Please, I think that's going to...
Story of the morning so far. Tensions rising in the AI arms race. A group of investors led by Elon Musk making a $97 billion bid for rival startup OpenAI. The co-founder Sam Altman saying no thank you and countering with an offer to buy Musk's X for $9.7 billion. Altman taking another shot at Musk with Bloomberg's Tom McKenzie at the Action AI Summit in Paris.
OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things for a long time. This is this week's episode. He's probably just trying to slow us down. He obviously is a competitor. He's working hard and has raised a lot of money for XAI, and they're trying to compete with us. I wish he would just compete by building a better product, but I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff. Now this, and we'll try to just put our head down and keep working.
Do you think Musk's approach then is from a position of insecurity about XAI?
Probably his whole life is from a position of insecurity. I feel for the guy. I don't think he's like a happy person. I do feel for him.
For a therapy session now, Tom McKenzie joins us now for more. Tom, welcome to the programme. Fantastic work. Really enjoyed the conversation the two of you were having, the short conversation over Elon Musk. Tom, can we just take a big step back? Can you explain to us all where this tension is coming from, how this started between these two big leaders?
Yeah, because it's turned personal, as you say, John. This goes back to 2015, when, of course, Musk was a key backer of OpenAI. Back in 2015 with Sam Altman. They shared an exchange on email about this. This is a good idea. Let's start to discuss and build out a research lab focused on open AI, on artificial intelligence that is open, that is transparent. That goes back to 2015. How things have changed in the last few years. You have the legal suits, the law cases coming through from Elon Musk. Sam Altman suggested to me this is just the latest step change in that tactics he would describe as being underhand. Elon Musk, his contention is that OpenAI has moved so far away from its original goals, creating open, transparent artificial intelligence with a focus on safety for the public good, and again with that stress on open, and it is non-profit. We know now that Sam Altman and the team at OpenAI are trying to look at how they restructure the business. Sam Altman told me they're not walking away from non-profit. Others would say, well, what is the definition? But we know the board are having those discussions, and Sam Altman described that to me. But what this reminds us, this is becoming very personal between Elon Musk and Sam Altman. It's also a reminder that this is about control. Who controls the most sophisticated technology in our hands right now and the direction of travel at the locals, at the startup level, but also at the national and sovereign level. And that is a story that's playing out here in Paris.
When you talk about how it's becoming personal, Tom, one thing that stuck out to me is how rare this felt. That a lot of people are not really hitting back at Elon Musk or any of Donald Trump's proposals because they're worried about retribution. Can you give a sense, especially at that conference, how rare it is to hear somebody out loud actually rebuke one of the people who are really setting policy in the United States?
That's a really interesting point. It is rare. In fact, Sam Altman's the only person I've heard come out and publicly rebuke Elon Musk. And I asked him, are you worried about the proximity that Musk has to President Trump? And he said, maybe I should be more worried than I am. I'm heads down. I try and get up in the morning and just build product. He has insulated himself to some extent, Sam Altman, with Stargate. And he came up there, of course, on stage at the White House with, of course, Trump around that proposal, 100, potentially up to $500 billion US. And Sam Altman told me that is a key question that he gets from people on the ground here in Paris is, can you build another Stargate in my country? Economic growth, he said, is a key question mark. And of course, I asked him about DeepSeek and the Chinese challenge. You were just talking about the call between President Xi Jinping and President Trump, if or whenever that happened, if it happened. Certainly China has reminded, DeepSeek has reminded participants on the ground here that China is a competitor. Whether or not they achieved the results they did in the measures that they claim to have, its bottom line is China is a competitor, and that has woken people up here on the ground as well.
Tom, did you get a sense, is he more concerned about Elon Musk with his business or DeepSeek?
Good question. I think he's more concerned at the delay tactics that Elon Musk is trying to put in place around the developments of the products coming through from OpenAI. Ultimately, he's very clear. This is not a business that is for sale. OpenAI is not for sale. But he did say that he thinks Elon Musk's rationale around launching this bid is to slow them down. And he talked about the fact that Musk has raised a lot of money with XAI. He's raised a lot of money, but I think Sam's contention is that they're still not catching up in terms of the product, XAI versus OpenAI. And that's the insecurity question that I put to him. He thinks this is a man who's insecure his whole life, and I'm quoting, is one based on insecurity, and he feels sorry for him. I think he's probably watching in terms of what XAI does on the competitive level. He doesn't think they're there yet. DeepSeek, maybe they borrowed some data, maybe they trained on it. He seemed to brush that off. And that seems to be what I'm getting from other executives here on the ground as well, is that whether DeepSeek have been truthful or not, you can kind of just put it in the category, it hasn't really changed the dynamic really on efficiency. Certainly that was a line from DeepMind's Demis Hassabis, the CEO of that business. But what it does do is accelerate the shift to OpenAI from closed AI.
Hey, Tom, great reporting as always, sir. Bloomberg's Tom McKenzie, helping to lead our coverage of the tech sector over in Europe. Look out for more from Tom through the week, and look out for that interview. We'll post the full thing on Bloomberg.com very shortly. Some real tension between those two guys at the moment.
I just can't get over the fact that you said now for the segment where we talk about our feelings.
Then the spa music started playing.
Just, this gentle, relaxing, sort of contemplative music in the background as he talks about insecurity and feelings. So, this is where we're at right now, and it's sort of interesting that, we're all talking about this at a time when it's become very personal between a lot of leaders of the tech sector, but also just more generally in the United States.
If we get any commentary from Elon Musk this morning, of course, we'll bring that to you. Let's get you an update on stories elsewhere. With your Bloomberg brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John. President Donald Trump told Israel to call off its ceasefire with Hamas unless all Israeli hostages are freed by midday on Saturday. The president spoke hours after Hamas announced it was indefinitely postponing the next release of hostages that was set to happen this weekend. Now, elsewhere, the president also made comments about his vice president. Trump told Fox News that he isn't ready to name Vice President J.D. Vance as his successor, saying it was too early to make such a determination. Trump said that Vance is very capable and that he's done a fantastic job so far. Now, also in tech, Meta has begun notifying staff of job cuts, cutting 5% of its workforce, terminating thousands of what it called low performers. The job cuts are expected to affect around 3,600 people. It's part of Meta's efficiency push and will create headcount for hiring new AI talent. And that is your brief. John.
Hey, Danny, thank you. Appreciate it. More from Danny in about 30 minutes' time. Up next on the program, preparing for Powell.
The Fed's on hold. Right, they are totally on hold right now. They're on ice. They may not move at all this year. It's probably a really high probability. Right now, the Fed is more likely to just sit on their hands.
That conversation up next with Leslie Falconio of UBS from New York City. You're watching Bloomberg TV.